over to 901, right?
Y'all ready?
Yes, sir.
Good morning, ladies and gentlemen. This is a May meeting for the Arkansas Oil and Gas Commission for the lithium project here close to Magnolia. And I'm going to turn the meeting over to Cheryl Edwards to make some announcements and greet the people.
Thank you, Mr. Langley. Good morning, everyone, and on behalf of Dr. Hicks, our president, welcome to Southern Arkansas University. We're glad that you're here, and we are anxious for today's hearing, and we really appreciate the state reaching out, and it was an honor to be able to host this on behalf of our Southwest Arkansas region. Just want to do a few quick notes. The restrooms are located outside, down the hall to the left, take a left and then turn right. Starbucks is open just around the corner, and there will be a slide about 10 minutes before lunch break that will let you know some places that are open on campus for lunch, as well as some dining venues that are open and available, and just about 2 minutes away from campus. So we hope that you enjoy your time here today in your Rider Country, and if you're ever interested, we love to give golf cart tours of our campus, and so we just welcome you to Magnolia, and we hope that everyone has a good experience here.
Thank you, Cheryl. Would everybody please silence their phones? Put it on silence, please. And I'm going to turn this meeting over to the hearing officer.
Thank you, Mr. Chairman. Good morning to everybody assembled. Good morning, commissioners. First item on our agenda, regular docket. The docket number is 032-2025-05. The applicant is Southwest Arkansas Lithium, LLC. Mr. Honey is the attorney of record. The subject is the establishment of fair and equitable compensation for lithium extracted from brine produced from the Reynolds Brine Production Unit. The location is multiple locations, and the county is Columbia, Lafayette, and other multiple counties. Would council be so kind as to identify themselves for the record? Mr. Honey?
Bob Honey on behalf of the applicant.
Mr. Rankin?
Jim Rankin.
Stovall. Sorry.
On behalf of South Arkansas Minerals Association, and I'm joined at the table by my partner, Forrest Stovall.
All right. Any other attorneys of record that have entered an appearance this morning that I might be unaware of? Yes, sir. All right, thank you, sir. Any other attorneys? Folks, I have a number of comment cards, and what we are going to do this afternoon, or this morning, I should say, probably into this afternoon, is we're going to hold off on comments until the testimony is elicited in this hearing. It'll give you an opportunity to hear what that testimony is, and perhaps formulate your comments in response to that testimony. It's a little different than what we've done in the past. In order to comment, though, you have to fill out a comment card, and I've got, as I said, a stack of them here this morning. If you do want to comment and you haven't filled one out, I believe there are some out in the outer foyer, and there's going to be a box to collect them. I'll remind you as we go through this that anyone who would like to make a comment needs to fill out those comment cards. But with that, how about an opening statement, or do you want to waive opening statements, gentlemen?
I think we've done this enough times now, an opening statement would be unnecessary.
Mr. Rankin, do you agree? Yeah, I think it's pretty redundant at this point. All right, Mr. Honey, you're recognized. Turn it over to you, sir.
Thank you. I'll start by running through the pre-filed exhibits and get them introduced into evidence. Exhibit A is the legal description of the Reynolds Brine Production Unit. Exhibit B is the list of parties who own interests in that unit, both mineral owners and leasehold working interest owners. Exhibit C is a chart that illustrates the concept of a lithium carbonate equivalent that we'll be talking about during the course of the presentation. Exhibit D is the EY report that was introduced last time that analyzes lithium royalties compensation on a global basis. Exhibit E is a sample calculation of a royalty or a fair and equitable compensation using the applicant's proposed method. Exhibit F is the affidavit of mailing of notice by first-class mail. Exhibit G is the proof of publication. Exhibit H is a hard copy of the slide deck we will be presenting here in just a moment. Exhibit I is a copy of the economic impact study, which one of our witnesses will be discussing here during the course of our presentation. Exhibit J is a resume of Joe Lowry, who is someone who will be talking about lithium. And Exhibit K is the CV of the person who was prepared the economic impact study, and both of those witnesses will be testifying later. I'd move the introduction of Exhibits A through K.
This motion is granted. Those exhibits are made part of the record.
We have also requested that the record in several prior proceedings be incorporated by reference. The first is order number 173-2007-04. That is the application and hearing where this commission set a royalty on salts pursuant to the same statutes that we're here on today for the establishment of compensation for lithium. Order number 083-2023-10, that was the first application by Standard Lithium seeking the establishment of a compensation for lithium. And order number 050-2024-09, that was the industry application for the establishment of compensation for lithium. I ask that the entire record of all proceedings in those three matters be incorporated by reference as part of the record in this proceeding.
Thank you, Mr. Honey. As referenced in paragraph 20 of the application, those orders are incorporated by reference into the record.
Okay. My first witness will be Jesse Edmondson. I'd ask that he be sworn.
Sir, would you be so kind? Do you swear or affirm the testimony you're about to give in this hearing is going to be the truth, the whole truth, and nothing but the truth? Thank you, sir.
I understand, Jesse, well, please state your name.
Jesse Edmondson.
And how are you employed?
I'm the Director of Government Relations for Standard Lithium.
And you are here on behalf of the applicant, SWA Lithium LLC, is that correct?
Yes, sir.
I understand you have a slide deck you're going to run through with the commission and the members of the audience. Yeah, okay. Yeah, if you don't mind, please present your slide deck and make a comment.
Thank you. Good morning, Commissioners, Director York, Judge Moulton, and all those in attendance this morning. My name is Jesse Edmondson. I'm a Fort Smith, Arkansas native and a proud graduate of the University of Arkansas Department of Geosciences, where I received my bachelor's and master's degree in geology. Go Hogs. Okay. I have over 14 years experience as a geologist and over 9 years of experience as a business development and government relations specialist in the critical minerals industry, with a particular focus on battery materials. I've been the Director of Government Relations for Standard Lithium for 2.5 years, and I'm here today as a representative of Smackover Lithium, the JV between Standard Lithium and Equinor, the parent company to SWA Lithium that is developing the SWA project in Lafayette and Columbia Counties, Arkansas. We're here today to request that the Commission set a fair and equitable royalty for lithium commercially extracted from brine within the Reynolds brine unit. As you're all aware, this is Standard Lithium's third attempt to establish a royalty before the Commission for one of our projects in Arkansas. And we're sincerely hoping that today is third time's a charm and not three strikes you're out. We've tried to listen and learn from each of these previous attempts and hope that you will see this has been reflected in the proposal we have before you today. The feedback we received from the last hearing was that the royalty methodology proposed was overall sound, but the number was too low and more economic data was needed. We've now raised the proposed royalty rate to 2.5%. This represents an increase of 37% from our last proposal. We believe this represents a number that is both generous to brine owners and fair to industry, as well as clear and transparent for all parties to understand and administer. And yes, we're here today because of the significant potential opportunity that lithium in the Smackover Formation in Arkansas presents to our company, to the state of Arkansas, and to the communities in Lafayette and Columbia counties. We are confident that lithium can be commercially extracted from the Smackover Formation at a profit. However, this opportunity also faces significant challenges that must be overcome, most significant being the fact that we have to compete in a global marketplace where our largest competitor is China. One of the key parameters that will be reviewed by financial institutions, investors, and potential partners as they consider their support for the project moving forward will be the royalty rate and how it stacks up against relevant and comparable projects from around the world. This is one of the last remaining items that requires certainty for our JV to make a final investment decision to finance and build this project. We've tried to be patient with this process over the last several years, but if we cannot come to a reasonable determination today, I'm afraid this will have a significant negative impact to our project timeline and potentially the viability of the project as a whole to move forward. With that being said, we've always trusted that the state and the commission would be fair and reasonable when setting a royalty for lithium. To underscore this point, it is absolutely unheard of in our industry that a company would spend over $150 million developing a mineral extraction project in a new jurisdiction without knowing the royalty. However, we've done this because we trusted the rich history of brine development in the Arkansas Smackover, the established regulatory framework in Arkansas for brine production, and the precedent that has been set in Arkansas by this very commission to establish royalty compensation for bromine and additional salts. We believe our proposal meets the requirements of statute to be fair and equitable, while also encouraging the development of lithium in Arkansas. So without further ado, I'm grateful for the opportunity to present to you today, to listen to you, and to answer any questions or concerns you may have about our project and proposal. As you're all aware, Smackover Lithium formally established the Reynolds unit last month at the AOGC hearing in El Dorado. This was a necessary step to complete in order to establish a royalty for the unit. On the left, you'll see a map showing the Reynolds unit in green, bordered by Saltworks Pine unit on the west, shown in red, and Tetra's Evergreen unit to the south in yellow, and then Albemarle's west field production area to the east. The Reynolds unit is 20,854 acres in size and is expected to produce approximately 22,500 tons per year of battery quality lithium carbonate from the lithium that's extracted from the brine in the unit. This will require a total capital investment of approximately $1.5 billion and will create over 300 direct jobs during the construction phase of the project and over 100 direct jobs once in operation. The quality of this project is underscored by the quality of the partners that Standard Lithium has attracted to support its development. Equinor is a leading global energy company based out of Norway that is our JV partner on this project, as well as our projects in East Texas. They not only bring capital, but major energy and infrastructure project execution and operations experience, as well as an incredible wealth of expertise related to the subsurface engineering, as well as the well field and pipeline design and construction. Koch is Standard Lithium's largest shareholder and is our technology partner through a technology licensing agreement we have with them, which allows exclusive use of this DLE technology throughout the Smackover region. We're also a proud grant recipient from the Department of Energy to help with the construction of the central processing facility of the SWA project. Most recently, we've also received the special distinction of being a priority critical mineral project from the Trump administration, which helps ensure a streamlined federal permitting process as our DOE award is triggered in NEPA environmental assessment process. Note that we are the only project to receive a DOE grant from the Biden administration and to also be classified as a priority project by the Trump White House, as well as the only lithium project anywhere in the Smackover to receive this distinction. All right, so let's jump right into the profitability and project economics. The economic analysis you see today summarized on this slide is taken from the 2023 pre-feasibility study for the SWA project and has been scaled to reflect the changes in product output and capacity. Additionally, this analysis includes an updated lithium price from $30,000 a ton, which was used in the pre-feasibility study, to $17,823. This number comes from averaging three of the most reputable market analysts that provide price forecasting, including Fast Markets, Benchmark Mineral Intelligence, and Wood Mackenzie. This number is also consistent with the expected average price ranges that major financial institutions are using to forecast price through the end of the decade. This analysis has also been adjusted for inflation and includes an estimation for the cost of financing the project. First, note the relative contribution of the well-filled pipeline and central processing facility to the total project capital expenditure. As you can see, the well-filled, which represents the cost of not only getting the brine up to the wellhead, but getting the brine back into the ground, into the Smackover Formation after lithium has been removed, that total cost only represents 22%, where the central processing facility, which is responsible for extracting the lithium from the brine and then converting that unrefined lithium salt into a value-added specialty battery-ready material, is over 78% of the cost. We ask that the Commission consider that 22% contribution when remembering the possibility of participation in the 8X rule. In the lower table, we estimate annual profitability for the project. Assuming an average sales price of the $17,823 for battery-grade lithium carbonate and the annual production capacity of approximately 22,500 metric tons per year of battery-grade lithium carbonate. Okay, by simply multiplying these two numbers, we get an annual revenue estimate of $401 million per year. So point out the numbers on the left there between revenue 401 and the net profit in millions. Those are all listed in millions of dollars. So total operating expenses are calculated by taking the sum of the direct and indirect operating expenses, which includes things like sustainable capital costs, manpower, power costs, consumables, and then other operating costs like financing cost and depreciation, which totals approximately $275 million per year. Okay, by subtracting the 275 in total operating expenses from the 401 million in revenue, we estimate an annual pre-tax net profit of approximately $126 million per year, which represents approximately 10% of the total capital expenditure. Okay, on a total cost per metric ton basis, we anticipate being able to produce battery quality lithium carbonate from the Reynolds brine unit for approximately $12,227 per metric ton, representing a profit of approximately $5,596 per metric ton when assuming an average sales price of $17,823. Again, this is a projection, it's an estimation, but it's using our most relevant available publicly reported data, as well as what we believe to be the most reasonable assumptions that are given current market conditions. With that being said, we believe this demonstrates the lithium can be commercially extracted for a profit from the Reynolds brine unit, and therefore we're requesting a royalty to be set. Okay, we've heard a lot of discussions over the past several years attempting to equate oil and gas value chains to direct lithium extraction as justification for a 1/8 royalty. This is inappropriate for several reasons, the most important being that oil and gas royalties are typically set against the value of oil at the wellhead. This is because this point most accurately depicts the value of the raw mineral, crude oil being extracted, and in the case of oil, there is a clear market value for this product. Even though a barrel of crude oil will eventually get further refined into specialty products like high-octane gas at the pump, jet fuel, and specialty plastics, the royalty is set at the first point upstream where a clear value can be attributed. In the case of direct lithium extraction, the mineral to be valued is brine, which has a minute amount of lithium ions dissolved in it. In the case of the SWA project, approximately 400 milligrams per liter. There is no clear market value for lithium dissolved in brine at the wellhead. The raw brine has to be further processed, where the lithium is extracted from the brine using DLE, and then further processed and refined into sellable lithium products that have established market values. Okay, so in order to connect a royalty rate to a market price for lithium, it has to be based on a finished product. However, the royalty rate must be based on the appropriate contribution the brine owner brings, while also being respective of the additional value add created by the producer through advanced material processing into a specialty product. Again, recall that only 22% of the total capital expenditure is in any way related to getting the brine to the wellhead. Okay, this slide just further illustrates the point regarding value chain. So there's no value for lithium dissolved in brine at the wellhead. The first product that is produced through the DLE process is a lithium chloride concentrate. This product also does not currently have a clear market value or any sort of significant established market in North America. Therefore, the lithium chloride must be further refined into a sellable lithium product. The first product that is closest to the wellhead value, but that also has a mature established market, is what's called technical grade lithium carbonate. There are available market index prices for technical grade lithium carbonate from fast markets for both North America and Asia. Technical grade carbonate can also be further refined to battery quality carbonate, lithium hydroxide, and potentially other specialty lithium products. But all those products reflect the additional value add and associated cost the producer bears to make these specialty products, not the contribution of the value of the lithium in the brine. This is also convenient, as lithium carbonate equivalent is the most common metric used by the lithium industry to describe and compare quantities of lithium across various projects. Lithium carbonate equivalent is just a standard unit of measurement used in the lithium industry to represent the amount of lithium contained in 1 unit of lithium carbonate. It's essentially a way to normalize different lithium products based on their lithium content to a common denominator, which is lithium carbonate. So this is relevant because over time, as markets change and potentially our product lines change, the royalty basis will remain true, as we can always calculate with transparency the relative quantity and the value of the contribution of lithium to any finished product. The conversion from any potential lithium compound to LCE is exact, and it's set by the fundamental laws of chemistry. Okay, it's imperative when considering an appropriate royalty structure for Arkansas that we remember the market for lithium is global, and any lithium production from Arkansas will have to compete globally, where our single largest competitor is China, who controls over 65% of the lithium market today. In fact, over 50% of the lithium battery market is controlled by 2 companies in China, who both started vertically integrating and producing their own lithium when the lithium chemicals prices spiked back in 2022. This has resulted in a dramatic crash in the price of lithium chemicals, where these companies and others in China have been willing to operate at or near a loss in order to maintain their control over the supply chain. This influx of cheaper and lower quality material from China caused the price of lithium to go from essentially $80,000 a ton to $8,000 a ton, as shown in the price chart below for technical grade carbonate using the fast markets China, Korea, Japan index. The price chart reflects the potential volatility in lithium prices and importantly illustrates that the long-term trend has been for lower prices in the $10,000 to $20,000 a ton range, not elevated price spikes. Note that where the lithium price was hanging around in mid-2023 at over $30,000 a ton when our SWA pre-feasibility study was published. Note on the price chart in red is the price for technical grade lithium carbonate for North America. This price index was established by Fast Markets in April of last year, and we are recommending that this index should be used by the AOGC to determine a royalty to ensure that the most fair market value for domestic lithium production is realized for brine owners in Arkansas, as any potential premium for made in USA lithium should be captured by this index. This assumption is consistent with what the price chart shows over the past year, where the North American index has traded at a premium to Asia and is reflected in the current delta in price between the two, where you can see that North American technical grade carbonate today is approximately $11,750 per metric ton, compared to China Korea, Japan, which is today at $7,950 a ton. Okay, here's the royalty formula that should look familiar to all of you. Again, this is the same framework that was presented at the last royalty hearing in November of last year. Since we received overwhelming positive feedback regarding the structure, we're still proposing that this formula is used today, but we've now increased the royalty again by 37% to 2.5%. Let me quickly walk you through the variables included in this formula. So on the far left, LCE produced. Again, we propose that the royalty should be calculated based on the quantity of lithium produced in terms of lithium carbonate equivalent, and that this should be done based on production, whether or not sold. Using the quantity produced ensures that royalty payments are more consistent to brine owners, and that the burden to sell the product is solely on the producers. This means that brine owners are to be fairly compensated as soon as reasonably possible after the brine has been extracted from the ground. We're recommending that we use the Fastmarkets index price for technical grade carbonate for North America. Basing the price off an index rather than actuals provides a direct connection to a real life market price for lithium, while also protecting the confidentiality of commercial agreements that Smackover Lithium will have with its customers. We're proposing that the Fastmarkets North American Index for technical grade carbonate is the most appropriate to accurately represent what each party brings to the table in terms of value, and that also gives brine owners access to the best valued market price for lithium that is produced in the United States. The royalty percent, which we've presenting today, is a number of 2.5% to be fair to all parties. We'll show here in a minute what that translates to in terms of an actual royalty payment to brine owners. Again, we believe this is generous to brine owners while also allowing Smackover Lithium to be globally competitive. And then finally, percent ownership. Each brine owner in the Reynolds unit will be compensated for the relative proportion of acreage they own in the unit compared to its total size of 20,853 acres. And again, we have an example calculation to follow that will illustrate this point. As we think about the total compensation that will be paid to brine owners in the Reynolds unit, we have to remember that the Arkansas brine statute requires a per acre brine fee payment that must be made in addition to the lithium royalty. It is our understanding that we will have to make this payment whether we ever produce bromine or not, which we will not. So the table below shows an example calculation of what the per acre brine fee equates to in terms of a percent gross royalty at current lithium prices. So first, we must determine the annual revenue from lithium sales. Using the expected annual production of the 22,500 tons per year of lithium carbonate, and using today's technical grade lithium price from Fastmarkets of $11,750, the expected annual revenue would be approximately $264 million. In terms of dollars, the total annual brine fee payment for the unit would be determined by multiplying the current brine fee, and here we're using the fee that I think will go to effect on June 1st of $65.14 per acre. Multiplying that by the total unit acreage of 20,854 acres gives approximate result of $1.36 million per year paid out just in terms of brine fee. So to calculate the percent royalty equivalency that the brine fee represents, you simply divide the 1.36 million by the total revenue of 264 million, and you get 0.51%. So for this example, when we consider the total cost of doing business for Smackover Lithium and the total compensation paid to brine owners in the Reynolds unit, at today's lithium prices, this means effectively a 3.01% royalty rate that will be paid by Smackover Lithium to brine owners. And note that that brine fee is always paid on top of the lithium royalty. Royalty compensation payment calculation is shown below. So here we show an example for both the annual lithium royalty payment as well as the total compensation that will be owed to brine owners of the Reynolds unit, where we also include the brine fee. This is shown below as the total payment to all brine owners for the unit, as well as using an example of 160 acre brine owner. So you can just see from the formula above, first looking at the total Reynolds production unit and what that would mean just in terms of a lithium royalty. So that's 22,500 tons per year multiplied by the 17,823 times 2.5% times assuming 100% ownership of the unit. That's a $10 million paid out per year in lithium royalties to the brine owners of the Reynolds unit. Looking just specifically for a 160-acre owner as an example, that would be a $76,918 annual payment. When we look at total compensation for the unit, so we take the brine, or we take the lithium royalty payment from above, we add the brine fee per acre times the acreage. So the 1.3 million plus the 10 million, you get $11,383,680 paid per year to the brine owners. Again, using an example of a 168-acre owner, that's $87,000 per year paid to that owner. At this lithium price, brine owners will receive an annual compensation equivalent to $546 per acre. Okay, I think we're all aware of the EY study that was presented at the last hearing. We believe this is the most complete, thoughtful, and relevant study summarizing lithium royalties globally. This study takes into account lithium carbonate equivalency, price assumptions, and as well as the contribution to global production. With this bar graph, we have simplified the key takeaways from this study and are showing the most relevant lithium royalties for comparison. The bar on the left represents current lithium producers without nationalized mineral resources, which is an average of 2.1%. The next bar on the right is for the same group, but it's weighted based on the relative production from each jurisdiction, which raises the royalty to 2.2%. The middle bar was put together in response to some of the questions from Commissioner Walford at the last hearing, who had asked about, what does this number look like for developed countries? So here we're using as a metric for developed countries, OECD, and this excludes Chile since it's a nationalized mineral resource, and we also note that it does not include Argentina, who is pending membership into OECD. OECD is the Organization for Economic Cooperation and Development. It represents 37 developed countries. The average for this category would be 2.34%. The next bar to the right is for emerging lithium jurisdictions that have proven resources and shown a decent likelihood of commercial success, which represents a royalty of 2.6%. The bar on the far right shows where our proposed royalty of 2.5 sits relative to our relevant peers in this industry. Again, in order for Arkansas to be successful in a global marketplace, the lithium royalty established by this commission for Arkansas must be competitive. Okay, as all Arkansans know and are tired of hearing, everything is bigger and better in Texas. Okay, as an Arkansas native, it hurts me to admit that this is also true for lithium in the Smackover. Smackover lithium has been active in East Texas since 2020, and to date we've found the average lithium concentrations in East Texas to be approximately 200 milligrams per liter higher compared to Lafayette and Columbia Counties, Arkansas. This will likely translate to the potential of bigger projects with better economics in Texas compared to Arkansas. In Texas, lithium royalties are not set by the state, but instead by individual lease agreements. Smackover Lithium has now signed over 1,000 different lease agreements in Texas, and not one of those leases have better royalty terms than we are offering today in Arkansas. We believe this fact to be most relevant when comparing royalty rates. For the lithium industry in Arkansas to be successful, we have to, again, compete globally with China. We have to compete with market share for others outside of China that have established low royalty rates. And perhaps most importantly, we have to compete regionally with Texas, which has higher lithium concentrations and is quickly catching up to Arkansas's first mover advantage presented by the established brine industry and regulatory framework in Arkansas. Okay, through this process, we've heard repeatedly that the only thing the community will receive from this project is the royalty payment. This simply is not true for several reasons. First, when we look at the ownership of the Reynolds unit, as illustrated on the pie chart shown above, the majority of brine owners in the unit do not live in Arkansas. In fact, over 65% of the ownership is from out of state. When we look specifically at how many of the owners actually live in Lafayette or Columbia counties, we see that that number is less than 20%. So no matter the royalty compensation, most of that is leaving the state and the region. Okay, to help determine the overall economic impact of the SWA project, both locally and to the state, we commissioned a study with the University of Arkansas Walton College of Business. Mervyn Jaberjar will be here today to present the results of that study in detail. But here's just kind of a summary chart with the highlights. You'll note some large numbers on this graph. Okay, so when we look specifically at Lafayette County, where our central processing facility will be located and where most of the brine rights are located for this project, the total project impact during the construction phase of the project will bring 4,026 jobs to this county. It has the potential to bring that many jobs to this county. Okay, so that is not only the direct jobs that will be at the plant itself, but this is additional jobs to support this project, truck drivers, welders, electricians, you name it. The total economic impact from construction to Lafayette County is $1.6 billion. During the operation phase of this project, the university's model predicts an additional 304 operations jobs, and the total economic impact from operations being $1.7 billion for Lafayette County. When we look statewide, we see even larger numbers. Statewide, from the construction phase of this project, the study estimates 4,715 jobs will be created during construction, which represents a total economic impact from the construction phase of the project to the state of $2.2 billion. For operations, 586 jobs. Across the state, $3.2 billion total economic impact. For comparison, if you remember, I showed the total payment, the total royalty payment out for the project. You look at that over the 20-year life of the project, you're looking at a number of $200 million. And again, 65% of that is going out of the state. So again, royalty payments are really only a small part of the significant positive economic impacts associated with the SWA project. I want to add to this that this does also not account for Smackover Lithium's dedication to the community, to Lafayette County, and being a good community partner. So we envision other infrastructure programs, workforce development programs, many of which are already underway, that we're investing in as a pre-revenue company. But when we look at the first 5 years of this project, it is certainly conceivable that those specific community programs, which will be done, might I add, outside of the Department of Energy funding, to be in the north of $5 million, specifically to the county. So, just summarizing the formula and what we think it represents, the proposed royalty is fair and equitable. It meets statutory requirements. It adequately compensates brine owners. It enables the development of the resource. It's simple, transparent, it's easy to understand and to administer. It's globally and regionally competitive and protects the proprietary and confidential information of the applicant. So establishing this competitive royalty, both regionally and globally, enables our company to continue to develop the project while also bringing significant economic benefit to the state and to the county. Okay, I wanted to close on this slide as it highlights our greatest asset, which is our people. This is our local operations team at our demonstration plant at the Lanxess South in El Dorado, where we employ over 35 local operators that live within a 1-hour drive of the demo plant. This is the most advanced and experienced direct lithium extraction team in North America in terms of the man-hours worked and the volume of brine that has been processed, as we have now both fully de-risked and optimized our DLE technology. Since arriving in Arkansas in 2017. We've invested over $150 million into our projects in the state. We've spent over 300,000 man-hours developing the projects, and we've processed over 31 million gallons of brine at that demo plant. Additionally, we've donated over $250,000 and thousands of hours of volunteer time to local causes in southern Arkansas. For the people in this picture and in this room today representing our JV, this is much more than an 8 to 5. This is an everyday commitment to do whatever it takes to build a new industry, utilizing a new technology, to reduce our dependence on China, to secure America's energy future, and to uplift the communities in which we are working and building projects. Through this effort, our team has become a family, and we are working every day to earn the right to be considered part of the community and the extended family of Southwest Arkansas by building this project in the right way and for the right reasons. I was given an awesome mandate by our leadership when I joined this team over 2.5 years ago. I was told simply, above all else, make sure this is a win for Arkansas. So I respectfully ask the commission today to vote yes on our proposal so we may continue to develop this project and put Southwest Arkansas on the map as a top domestic producer of lithium for America's energy future. I thank you.
I think, Judge Moulton, perhaps the logical way to proceed would be to open it up to cross-examination by counsel at this point.
I agree, Mr. Honey. Mr. Rankin, any questions?
Yes, thank you, Judge Moulton. Good morning, Mr. Edmondson. It's good to see you again.
Good to see you.
All right. You've laid out a great presentation, and I want to say, as I start off my questioning, that South Arkansas Minerals is excited about the lithium prospects in South Arkansas, and we're excited about the opportunities that presents to the economy here. But I need to ask you a few questions about your presentation. You mentioned that this was the third time that Standard Lithium has been here on a lithium presentation. I want to take you back to docket number 083, 2023. And were you with Standard Lithium at that time?
Yes, sir, I was.
Okay. Do you recall what your methodology for determining the royalty on lithium was at that time?
Yes, sir, I do.
In fact, wasn't your proposal to pay a royalty based on the gross proceeds of price actually received for the sale of lithium carbonate?
Yes, sir.
And did you also not propose a sliding scale or adjustable scale royalty at that time?
There were buckets of prices, and that was based off the precedent set in California. We felt that given that was out there, that had been passed, that was an easy precedent to point to, and that we put together a royalty structure around that we felt like made sense.
So in your current application, there's a statement in paragraph 14 that it is not feasible to use the applicant's actual sales proceeds from the sales of diverse specialty products as a basis for compensation calculation. However, you proposed that very methodology in 2023, did you not?
Yeah, so the proposal we have before you today is under the joint venture with Equinor, and it's the thinking of the JV that it's best that it's set against an index price.
I understand that it's the thinking and it's the desire, but you actually proposed calculating royalties on gross sales of actual price received, did you not?
Yes, sir.
What changed, other than your business partner?
Well, that's pretty significant, sir.
In your presentation, I believe it was on slide 8, where you went over the total brine, it was in slide 3, where you talked about the profitability analysis.
Yes, sir.
The total tons of lithium carbonate produced, you listed at 22.5. However, in March of this year, in your presentation for management, on page 10 of that presentation, you stated that 45,000 tons was the estimated production. Can you explain to me what the difference is and why you're using a different number?
Yes, sir, I'd be happy to. So since that time, we've now broken the project up into 2 phases. And so what you're seeing, what's presented before you today is for phase 1. So it would be 22,500 tons per year. we absolutely expect to build a phase 2 of this project. If that comes to fruition as we hope, you can expect a doubling of the CapEx for the project, a doubling of the opportunities around that project. And might I add, we'd like to use some of the revenue that we make from phase 1 to build phase 2.
You think the CapEx in phase 2 is going to be equal to or greater than phase 1?
It will be comparable. We do not have those numbers to present to you today, but yes, sir, it will be a big number.
Let's talk about the numbers that you've presented today. It's a pretty high view with using a bunch of totals. I want to know, are any of the backup or details for the total cost of production and recovering this lithium resource, is any of that publicly available?
So what's publicly available is in our pre-feasibility study that was published in 2023. We've made reasonable assumptions given the change in scale of the project and the fact that we're now making lithium carbonate and lithium hydroxide.
Have you provided this commission with any details of all costs of producing and recovering the same, of the lithium?
We have our operating expenses listed on that table.
I understand you've got a sum total listed there, but are any of the details showing the actual costs and expenses expected shown anywhere?
The greater breakdown of those details is available in the pre-feasibility study, which is publicly filed.
And when was that?
That was in 2023.
Okay. You're using, you stated that it's not feasible to use actual revenue or actual sales to compensate your royalty owners, but don't you have an agreement with Tetra to use gross revenues in paying the royalty that they have for participating in your unit?
Yes, so what you're referring to is the Tetra override arrangement that we have with them. So it's very typical in the mining or mineral industry when you approach a potential partner that has built a significant large land package for a really good project like the SWA packages, that there would be obviously some compensation for that. That can be paid upfront in cash, or that can be deferred through an override arrangement like this, which reflects, which gives them exposure to the project. This is a very typical model for our industry, and I'm sure it's typical to the commissioners in terms of the oil and gas business as well.
But back to my question, aren't you calculating the royalty to be paid to Tetra based on gross revenues?
Yeah, I am. I mean, if you want to insist on using revenues, we could talk about that, but index price is generally greater than revenues. Okay, the index price, which we said it allows that transparency, it protects against the confidential commercial arrangements that we have with our customers. But we're insisting on the index is giving maximum value to the brine owners. We think in terms of fair and equitable, that's the best thing that we can do. So that's why we've proposed that.
I understand your proposal here, and my expert, Dr. David's going to address some of those points, but I just wanted to make sure that we were clear that the royalty you're paying Tetra is based on gross revenues, even though you say that it's inappropriate to use that. In your experience in the extractive industries, when you see an override, and let's say in this instance it's 2.5%, wouldn't an underlying royalty of at least 3 times that be reasonable?
Absolutely not, sir. I've never seen that in my experience, which I've outside of Standard Lithium Wearing and Geology I'm very familiar with lease arrangements with potential overrides and what the expectation is of investors. You know, Standard Lithium, our president's to my left, so he can nudge me if he wants to chime in on this. But we made the assumption when we agreed to a 2.5% royalty, as many do when they also agree to overrides, that there was also going to be a low royalty associated with production and extraction that would be paid to the actual royalty owners. So it's very typical in our industry when a large land package has been put together that you would see an override royalty in the 1 to 3%. But again, that's assuming as well that there's going to be a royalty paid out to others, and that the combined total of that is going to be reasonable.
You're insisting on using an index for determining pricing. Do you have any concerns about the tendency of indexes to be manipulated?
I mean, they're based on real data, okay? So if you want to say that what's being manipulated right now on the Asian index because of some of the activities of China, I don't know that I would argue with you on that. If you look at the North American index and how that's transpired, we think that that's the most fair and representative index for what the value is of lithium in the United States.
But if it's open to manipulation, if it can be controlled by those inputting information, isn't a more true value of the lithium what the market is paying for it at any time? The sales of that lithium product?
We believe it's the index captures what's an average price.
Are you familiar with the LIBOR index?
Interbank lending?
Yeah.
My colleagues are, if you'd like to ask them a question specifically about that.
Well, you may actually have an expert that's going to talk about this, but, LIBOR, ISDAFIX, Forex, all indexes that have been sued for antitrust for being manipulated. You don't have any concern that using an index in this case could open up the royalty owners in this state to the same type of manipulation?
Well, I want to point out that actual sales almost always are based off an index. In fact, most of the time, actual sales are done at a discount to index.
But we don't even have to use an index if we actually go by your reported revenue. And if you used reported revenue, let's say on a quarterly basis, just like you proposed in your application back in October of 2023, you don't have to disclose your private contracts. You report it quarterly, you pay it quarterly. This protects your proprietary contract information. Why is that not the best indication of the value of the raw materials you're taking from the landowners in this state?
I believe I've already answered that question. It certainly could be done that way. We believe the best way to do it is the way we proposed today.
But you thought the best way to do it a year and a half ago was to use actual sales, right?
That's what we proposed at the time, yes.
I don't have any other questions.
Thank you, Mr. Rankin. Mr. Honey, any follow-up?
No.
Commissioners, any questions for Mr. Edmondson? Mr. Honey, next witness, please.
There's Paul Mervin. I'm going to butcher this, I apologize.
Sir, if I could swear you in. You swear affirm the testimony you're about to give in this hearing is going to be the truth, the whole truth, and nothing but the truth?
I do.
Thank you, sir.
Mervin, would you please state your name and for the benefit of the court reporter, spell your name?
It's Mervin Jebaraj, MERVIN JEBARAJ.
And I understand you were the person that was responsible for preparing the economic impact study that has been introduced as Exhibit I.
I am.
Is that correct?
Yes.
If you don't mind, just go over, kind of give us a 30,000-foot view of what the economic impact study is, how it's done, and what you concluded
Sure.
when you did the economic impact study.
Sure. Good morning, Commissioners. My name is Mervin Jebaraj. I'm the Director of the Center for Business and Economic Research at the University of Arkansas. Since 1943, our center has provided economic forecasts, analysis, and insights for businesses, nonprofits, and government entities in the state of Arkansas. But today, I'm here to briefly present the findings of our study to analyze the anticipated economic impacts of the proposed SWA direct lithium extraction and processing plant in Lafayette County. Our study found that the economic benefits of this project are substantial, both during the construction and the long-term operation of the facility. During the construction phase, which will span from 26 to 28, the plant is expected to generate an investment of about $1.36 billion. This investment will support an average of 4,700 jobs across the state of Arkansas, including more than 4,000 in Lafayette County. The statewide economic impact from construction alone is projected to exceed $2.2 billion, and the impact in Lafayette County will be about $1.6 billion. The construction activity will also generate significant tax revenues across all levels of government, in particular, $65 million to the state of Arkansas and $17 million at the local levels of counties, cities, and sub-county level taxes. $10 million of that would be in Lafayette County. These are all one-time impacts. Turning to the operational phase, which will begin in 2028 and continue through 2047, we expect ongoing impacts annually. The plant's ongoing activities will sustain nearly 600 jobs statewide, including 304 in Lafayette County. This is particularly important for Lafayette County, where the unemployment rate is 5.6%, about 2% higher than the statewide average. Over the full 20-year period, the economic impact of operations is expected to reach $3.2 billion statewide and $1.7 billion in Lafayette County. The labor income associated with the operations is expected to total $690 million statewide, and nearly half that amount is in Lafayette County. The jobs produced by this economic impact largely benefit holders of high school degrees in the county and around the state as well. The GDP contribution to the state of Arkansas will be about $1.4 billion. The operations are expected to generate significant tax revenues as well, with $172 million going to the state and $58 million going to various local governments, including $10 million in Lafayette County. In short, this project is more than just the extraction of a mineral. It could be a transformative economic opportunity for the state of Arkansas. It brings with it advanced technology, hundreds of permanent jobs, particularly to part of a state that needs additional employment opportunities, and billions of dollars in economic activity in the state of Arkansas. It also strengthens our strategic position in the future of the energy economy by placing Arkansas at the forefront of domestic lithium production and potentially spurring the location of additional industries in the lithium to battery supply chain. Thank you for the opportunity to present this information.
Thank you, sir. Mr. Rankin?
I'm sorry, could you pronounce your last name for me
It's
again?
Jebaraj.
In your economic study, at any point, are the value of the royalties to the landowners included in any of your analysis?
No, it's not.
So this economic analysis that you're presenting today really has nothing to do with the determination of a royalty, does it?
I'm not sure I can answer that question.
All right, no other questions.
Mr. Honey? Commissioners, any questions? Smith, thank you very much for your testimony. Mr. Honey, your next witness?
Joe Lowry.
Lowry, would you be so kind? Do you swear from the testimony you're about to give in this hearing is going to be the truth, the whole truth, and nothing but the truth?
I do.
Thank you, sir.
Would you please state your name and spell your last name for the benefit of the court reporter?
This might be an easier one. My name is Joe Lowry, Lowry.
Joe, your resume has been introduced into evidence as Exhibit J. Just from reading your resume, it's obvious you've been involved in lithium for basically your entire professional life. If you don't mind, would you please just kind of give us a brief chronological history of your career in lithium, and I guess as part of that, kind of just a little bit of a history of lithium.
I started in the lithium industry in 1990 with a company called FMC Lithium, which at the time was one of the two largest lithium producers in the world. The lithium industry in that era was controlled by two companies running out of North Carolina, primarily. I spent 23 years with FMC Lithium, and during that time, And I started actually before the lithium-ion battery was commercialized. So at the time, lithium was a very small industry, less than $200 million in global sales when I started. The lithium-ion battery industry is what's changed everything. It's why we're here today. If there was not a lithium-ion battery, then what's produced in the Atacama in Chile could easily supply the entire world demand for lithium. If you take out the demand, if you take battery out, you have still a very small industry. I happen to be the person in charge of the two products, lithium carbonate and lithium hydroxide, that were selected by Sony when the lithium-ion battery was commercialized. So most of my career has been involved with selling lithium and managing the business with respect to the lithium-ion battery. I spent 11 years of my life in China and Japan. I lived in Japan from 2000 to 2005 when that was the epicenter of the lithium-ion battery, and I moved to China in 2005 and lived there until the end of 2010, moved back here. I left FMC in 2012, started an advisory service. I've advised most of the lithium companies out there at one point or another, and that would include Albemarle and some of the names that are familiar to you. I have no ongoing relationship with Albemarle. That ended a long time ago. But I also advised the largest Chinese battery company. You may have heard of CATL. I helped them set their lithium strategy. I was selling to a company called BYD, which is the largest EV manufacturer in the world. I started selling to them 25 years ago when they only made cell phone batteries. They did not yet make electric vehicles. I've advised the largest Chinese producer. I've raised financing for the largest lithium project in Argentina. And I'm here today at the request of Standard Lithium just to give my perspective on the industry. What you have seen happen in the last 3 years in the lithium industry has been a complete change, and you saw it in the price diagram. China now, and Jesse mentioned this, two Chinese companies, CATL and BYD, control about 55% of the battery manufacturer, which means they control almost 50% of the lithium industry supply chain. And they have made a concerted attempt to move the price down by operating assets inside China that are very low quality, very high cost, but CATL, for example, will buy approximately 450,000 tons of lithium carbonate equivalents on the market this year for their supply chain. So they're willing to operate 50 or 100,000 of capacity either through direct ownership or through tolling agreements to depress the lithium price. So the lithium prices that you see now, when I was advising clients a few years ago, I was telling them to use 30,000 as a long-term lithium price. I would now actually give them a number that's lower than what Jesse had in that presentation, simply because China has made it a strategic initiative to control the EV market, to control the battery market, to control the cathode market, and to control lithium. Why does that make any difference to you? Well, I think it makes a big difference in that I would love to see Arkansas producing lithium, but it's not a fait accompli. These projects, the numbers you see for the capital, are very high by any standards. This $1.5 billion for 22.5 thousand tons of lithium carbonate is by far the highest capital that's ever been put in a lithium project of that size, brine project of that size. In spodumene, hard rock, the other major technology, is actually much lower expensive to get into production, and that's really where China has the most play. My concern that a lithium, a fair and equitable royalty be determined is that you have attracted Equinor, you've attracted Exxon. They're all interested in producing lithium from the Smackover. but they're also in business to make money. And capital hates uncertainty. And I think you need to come up with a number. And I'm speaking as, this is my own opinion. This is not, I'm not speaking for the company represented. This is just my feeling on this, is that this is a reasonable royalty. I have, in Argentina, there's a federal maximum of 3%, which doesn't mean the provinces control the royalty. The government has a max of 3%. Doesn't mean the provinces have to have 3% has to be charged. I think the other side here has an expert that will talk to that. But if you look at what's happened in South America in the last 5 to 7 years, Argentina's getting all the lithium investment. Chile has a much different royalty structure, and the capital is more attracted to the situation where the costs are known and the costs are fair but reasonable. I am happy to answer questions, but I have been doing this for a long time, and I spend a lot of time advising investors as well as lithium companies and technology companies. And I'm really hoping that Arkansas produces lithium, but I think it's really wrong to just assume that these projects are going to go forward, and anything you can do to help incent that is probably in your best interest.
Joe, just a few minutes before the hearing started, we were provided with a copy of the slide deck that the objector's expert is going to use. Have you had a chance to attempt to review that very quickly? And if so, do you have any preliminary comments on it before we hear the testimony of the expert?
Well, I think fair and equitable royalty, my question is the first bullet point, that royalty should reflect a sharing of value generated by the enterprise where the value is the return on investment undertaken by the producer. I'm not sure where that came from, because right below it, I think, is royalty should encourage development of the Smackover Formation. I think that's something that you're all acquainted with, and it's part of your mandate. But I'm not sure the top line is, and my perspective is that what Standard's proposed here, based on lithium carbonate pricing, is very fair, because what's coming out of the ground, you can value. They haven't proposed it, but there is a precursor market in the world, and if you went there, you'd have a very different outcome as to what percentage the mineral owners were getting as a return. That would be my only comment.
Yeah. And you've had a chance to look at the numbers, the actual numbers that the objectors are proposing. Are the numbers the objectors are proposing anywhere, even in the ballpark, in a world lithium market?
Well, if you would ask that question specifically, so I know exactly what you're asking me to comment on.
We'll pull that back. I think it'd be better to potentially recall you after we hear the testimony.
I think my experience has all been practical. It's all been with projects. I'd make one other comment, is that, and I will say this at the risk of irritating somebody on this table, but I think they should accept your proposal, or the other side's proposal, to use actuals, because actuals are going to be lower than the index. First of all, I think Jesse touched on this. Most contracts now, especially for new producers, are at a discount to the index. That's the way contracts are structured. And I know this specifically, but I'm under non-confidentiality or confidentiality agreements with some of my clients. But I can assure you that your interests are better served not using actuals if you want the highest payout to the mineral owners. But that's your decision.
I'll pass the witness.
Thank you, Mr. Honey. Mr. Rankin?
Thank you, Judge. Mr. Lowry, you mentioned the contracts that Standard Lithium may or may not have. Do you know anything about those contracts personally?
I know how contracts are negotiated. I've probably done more contracts in lithium chemicals than anyone on the planet, and I don't know anything about standards. They haven't invited me into that exercise, but I've been active in the market, even in my current role, and I can tell you that most contracts now, especially for new producers, in a market that is currently oversupplied due to what China's doing, is the negotiating power is in the buyer's hands right now, not the sellers. And the discounts to the index kind of obviate the point that you previously asked about.
Right. And I think you answered my question is you don't know anything about their contracts that they have in place, but
I don't know that they have any contracts in place.
are you aware that some contracts have a price floor that in some instances is higher than an index?
What I'm aware of, and if you go back to earnings calls from Albemarle Corporation from 2017, they talked about having price floors almost every quarterly. And every time the price went below those floors, they went back and said their price was lower because they had to renegotiate their floors. So I don't believe that there are floors in the lithium industry that I'm not saying a floor is never held, but I'm saying floors tend to be conceptual and subject to the vagaries of the market, and those are, I think you can go out and go back and read public documents that indicate that.
You testified when you started your testimony that, and if I misstated, then please correct me, but I think you said that in your opinion, the prices will remain low for the foreseeable future. Is that kind of your
No, I
opinion?
didn't say they remain low. I said I think if I took my number now, my number for economic analysis would be lower than the 17,000 and change that's in there. That's what I said.
Okay. And that was, all right, 1,700. Let me ask you this.
17,000.
17,000. Thank you. Did you author an article in November of 2024 called "The Price Isn't Right"?
I did.
All right, I want to ask you a couple of questions about that. You think that the pricing is going to remain below 17,000, and if I misstate your opinion in this article, please tell me. But I believe you stated in here that by 2026, you believe the price is going to be in the low 20s. Is that not your opinion?
I've said it's not my opinion now because this is a very dynamic industry, and you probably could go out and go on LinkedIn, and I always say one thing: anytime I predict a price, I know one thing: I'm wrong. I just hope I'm close. So right now, with what we've seen in the last several months, from CATL restarting their money-losing mine, I don't know when price is going to be above 20,000. I've looked at the pricing in the economic analysis that you've done it, and I really don't have. I wouldn't argue with that, honestly, because nobody knows where price is going to go, and the unfortunate part of my business is that people ask me to predict price all the time, and it's a very dangerous game. And that's when somebody comes up and says, you said this, last year, and yeah, my opinion has changed.
Since November 2024.
It absolutely has. This is a dynamic world.
How has the price of lithium been over the last 6 months?
It actually has gone down now where some of the spot sales are being stated, and I'm always skeptical. China has an interest in keeping the price down, so it's gone below 9. It may go below 8. It will turn up.
Do you know what it is today?
I could look. It's reported every day. I mean, if you want me to get on my phone and look.
I'm just asking you.
No, I don't. I haven't looked today. I had other things to do.
You also stated that the costs are higher on brine projects. Is that,
No, that's well, if you'd have to give me the exact quote. Generally speaking, conventional brine has lower OpEx than direct lithium extraction. And that's the other point I will make, is there is actually right now what the people in the Smackover have to have is pure direct lithium extraction. The only commercial scale, quote unquote, DLE running right now anywhere in the world has ponds except for Aramet in Argentina, and they are struggling to start up that plant.
well, I'm looking at a graph that you've got here, and it resembles a graph that we are going to show in our presentation that comes directly from Standard Lithium, but at least on your graph, it shows that the CapEx, or the cost associated with brine projects, ranges anywhere from $500 to $7,500 a ton. Does that sound to be about accurate, as you recall?
Are you talking about, you need to be specific when you're talking about brine, because there's all different grades. I wouldn't argue with that as a general range statement, but there are certainly going to be, the more you go to DLE, you will have certain instances with low grade lithium, with projects that have been proposed in Western Canada that would be much higher than that.
But you would agree with me that lithium projects that are deriving lithium from brine projects is far less expensive than, say, spodumene or rock mining, correct?
That's absolutely not correct. Let me give you some basic background. Greenbushes, the world's largest and best hard rock asset, the cash cost at Greenbushes is as low as anything outside of the Atacama, any of the brine. Once you go to higher cost hard rock, then your statement comes into the realm of truth. But you can't make the generic statement. The world's largest operating hard rock lithium mine, Greenbushes, is very low cost.
And I just wanted to get that in the context of your earlier statement when you began your testimony, that the cost associated with deriving lithium from brine are typically higher. And I just wanted to make sure that...
No, are you confusing CapEx with OpEx?
I don't believe so.
I think maybe you are. If you want to go back and just ask a specific question, that's fine. Generally speaking, I would make the statement that lithium carbonate, on average, produced from brine is lower cost than on average produced from hard rock. I would not make a sweeping claim that all brine is lower than all hard rock, because it's simply not factual.
One final question. In your article from November 2024, did you also have an opinion that by 2028 and 2029, the price of lithium could be back up to $30 or $30,000?
Again, things change. I don't know what the price is going to be. I hope it is. But if you're reading it, I'm not going to dispute it. I mean, if I've got I think 101 articles on LinkedIn and on my website. So some of them are right and some of them are not.
All right. Thank you very much. I don't have any other questions.
Thank you, Mr. Rankin. Mr. Honey, any follow-up?
No follow-up.
Commissioners, any questions?
I got a question. So, some of the stuff you said that, comically said that you say is correct, some of it isn't. So how do I know what you're telling me today is correct?
Well, when you
Just asking.
when you predict the future, you're often not going to be correct. That's what I'm saying. I haven't stated any cost fact or price fact from the past that's inaccurate.
Okay.
I'm very clear about history. And when I say that if I said something in 2022 or 2023 or 2024 and circumstances change, because China has taken control of this market. Now, another thing you need to understand, though, is China's dependent on lithium resources. But they went to Western Australia early, they went to Argentina early, and now their holy grail is Africa, because they can do things in Africa that they probably can't do in other places to bring capacity online quickly.
You kind of answered my question. One more question. Did you state in your testimony that this was the most expensive cash outlay
Today, right now, if you take
Can
one.
I finish my question?
Yeah, okay.
Did you say that this is the most expensive cash outlay that you've seen of any company? On
No,
a
I didn't say
lithium
that.
Project? Okay, well.
I said
I was
for
going-
capacity, you have to, capital intensity, you have to take the capacity that you're building for the price. So Thacker Pass, which is neither brine nor hard rock, it's sedimentary in Nevada, which by the way has zero royalty. It's on BLM land. Thacker Pass is gonna be a higher capital project, but it's a higher capacity project and it's neither hard rock nor brine. So that did not come into play in that comment. What I said, the point I was making was that $1.5 billion for 22,500 tons is by far the highest capital cost for a brine project. I raised the initial capital for Cauchari, which is a 40,000 ton project in Argentina, that had some overruns, but still didn't get quite to $1 billion. And if you put it in today's dollars, it would still be less than this, and it's twice the capacity.
So in your expert opinion, we know what it ranks in cost. What does it rank in potential
Well, if you're
with
talking.
all the other
Well,
projects?
making 22,500 tons from the Smackover is a first victory. So, I mean, I have confidence. I will tell you that there isn't any commercial deal yet. I believe these guys will bring it into fruition. But my point is, when you look at putting capital into the Smackover, it's more expensive
Right.
than conventional brine. That was
My
what.
question was about potential,
Yeah.
not what it costs.
Yeah, I'm a firm, I wouldn't be here today if I didn't believe that
So how do
this
you
project
rank
could be
that
successful.
potential with every other project in the world? That was my question that you've seen.
When you say, if you put a project in motion to make X tons and you're successful, you have completed the mission. And I believe this project will go forward if the royalty's set in a reasonable way. I believe you have deep pockets that want to invest here. That's what the lithium industry has never had. We just finally have had oil companies and mining companies get interested. For 30 years, the biggest lithium company was Albemarle, which by any standard is not a huge company. Now you have Equinor and Exxon and companies that have the balance sheet to do anything they want to do if you create the proper situation for them to do it. That's my point.
Let me reword my question where maybe I can get an answer. So do you rank this project in the top 10% of potential of any other projects?
You're
being
asking, what is
successful?
your criteria for ranking?
Your expertise and what you've seen as far as potential and being profitable.
I believe they have the potential to do what they've said that they want to do. Is
So you don't
is
have-
that an answer to your question?
No, sir.
Because who am I ranking against?
Well, you worked all over the world. You said you knew more about lithium contracts and negotiations
Yeah.
with lithium than anybody
Yeah.
else on the planet. So I just thought maybe, it was just a question. But
It
that's
wasn't
fine.
well framed.
Sir?
I'm sorry. It was a question that was hard to answer because I didn't
Okay.
really, ranking against.
That's all I
who.
got. Thank you.
Mr. Chairman?
Joe, are you going to work for Smackover Lithium, or are you just here as an advisor today?
I've advised Standard Lithium for a number of years, and how long I advise is up to them. I serve at the behest of clients, but I haven't had any trouble staying employed.
Thank you, sir.
Commissioner Bengal?
Couple questions. What percentage of the world's lithium is from hard rock right now?
Right now, it's about 65%.
Okay. Following up on Commissioner Phillips' question, maybe a little more. If you had to invest in a new DLE extraction brine project or in a hard rock spodumene mine with a fairly high quality lithium content, which would you favor as an investor?
I'm a brine guy,
Okay.
so.
Would you do that based on your interest in brine to move
No,
that
I've
business
sold-
or economic aspect?
It's really economics, because once
Okay.
you get outside of green bushes, then, and that's the real promise here, is that you unlock the Smackover. It's a major win for brine in general, for the United States, and for lithium, because most of the hard rock being found now, that's why price will eventually go up. I'm not gonna say what year, but the cost curve is going up.
Okay,
Every project, hard rock project tends to be more expensive.
okay. I think that may answer your question a little bit.
Yes, thank you.
We
Any other
talked
comment?
about the
Sorry,
royalty
Councilman
in I think it was Argentina?
Yeah.
Of 3%. What was that actually on? Was that on brine, or that was on the concentrate of,
No, it's a great question, because when FMC originally started in 1997, what they paid was what the wellhead value was, and the wellhead value was what they said it was. And then after about 20 years, the mining secretary, who was a friend of mine of Catamarca Province, went back and demanded a royalty, and it's 3%, which is based on the federal cap in Argentina.
and is that 3% of the finable sale product, or 3% of the
It's sale price,
intermediate?
but those, as people talked about manipulation, the sales prices out of South America have been manipulated for years, because it's been what it left the country at, which it very often was at a transfer price rather than a market price. And that's what I actually advised the Chileans before they had the royalty they had now, that they were not capturing the royalties that were in place at the time at the market value. They were getting a transfer price value, and they ought to go look at that.
In the spodumene market mining, are royalties in the projects that exist paid at the mine on the concentrate?
Yeah, they
Or
pay
they
on the
pay
value
on
of
the
the,
value of-
I think it's in the E&Y study, it's 5% on the value of the spodumene.
Okay.
And right now, they're going through, because the market isn't good right now for them, they're asking for royalty relief, but we'll see what
And
happens.
what is the value of spodumene concentrate, like 6%?
Well, actually, only one company makes 6%, but they always talk about 6% grade, and they adjust to it. Most of the newer projects are 5.2 to 5.5%.
And what's that per ton on the market?
It's in the 7 range now,
700?
It's gone as high as 6,000.
Okay.
When you saw that big spike on Jesse's chart in 2022, 2023, lithium carbonate spot in China went up to $80,000 a ton, and spodumene at the time it went over 6,000.
So spodumene concentrate, though, is not 6,000 now.
No, it certainly is not.
Well, what is it, more like
$700-ish.
$700, yeah?
It depends, it depends on who you are.
And so the royalty's paid on the $700
Yeah.
value for the spodumene concentrate?
It's not paid on China buys, the only game in town for most spodumene producers is China, because they have almost all the conversion capacity from spodumene concentrate to lithium chemicals exists in China. They have massive excess capacity.
And with regard to Thacker Pass, I mean, nature's done a lot of the refining there a little bit by eroding.
Thacker Pass?
Yeah.
Thacker Pass will make lithium carbonate.
But nature's done a lot of the work by eroding it, putting it into an easily mineable sedimentary rock.
Yes,
as opposed to
it's very
pigment.
easily mineable.
I was reading that the royalty there, I realize it's BLM land, but I read a $465 a ton LCE royalty.
Thacker Pass is not paying a royalty.
Okay.
They have a deal from, the project was called Western Lithium had the project. It was called the Kings Mountain Project. They signed a financing deal where they agreed to pay 1.8%. But that wasn't a royalty, that was a financing deal.
Okay. Is that on the private land or the BLM? company?
No,
It's all
that
private.
was for the project. It's still the BLM land because it's the project.
And is
But-
BLM
But
established?
it's Orion Capital, I believe, holds that.
In that project, is BLM established? Any royalty to the
No.
federal government? Any contemplation of establishing a royalty to the
I
federal government?
won't say what, you guess what the government's contemplating right now, and you're better than I am.
But there's none established at the moment.
No.
All the questions I have.
Thank you, Commissioner Bengal. Any other commissioners? Based on the line of questions from the commission, any follow-up from council? Mr. Honey?
No.
Mr. Rankin? All right, with that, we're going to go ahead and take a 10-minute break, Mr. Chairman. Yeah. We'll be off the record for 10 minutes, and we will reconvene at about 10:41. We're off the record. Thank you.
Yeah.
No.
All right, folks. Hello? Hello?
He's working on it.
All right, folks, can you hear me? Could everyone start resuming their seats, please?
Where'd they all go?
Go. Thank you all very much for your cooperation and settling back down again. Before we go on the record, I want to remind everybody that may have come in late that we will be accepting public comments on this application and this proposal, but they will be elicited after the close of the testimony. If you would like to make a public comment, you're going to have to fill out a comment card. There is a box in the back of this room with comment cards available for those that haven't filled one out that do want to make a comment. You just put them in that box, and at the close of the testimony, I'll be collecting them, and then we'll call on you for a comment. All right. We are back on the record. Mr. Honey, do you have any other witnesses, sir?
No, that concludes our presentation.
All right. Since Standard Lithium has concluded their presentation, Mr. Rankin, do you have your own case that you would like to put on, please?
Yes, Judge. On behalf of the South Arkansas Minerals Association, we have two people that are going to speak. The first is Dr. Jesse David. His CV was attached to our objection as Exhibit B. And we also have Mr. Eamon Mahoney as Vice President of South Arkansas Minerals. But if it's okay with the commission, I'll just turn this over to Dr. David.
Thank you, folks. Appreciate your patience.
I'm going to have to swear you in first.
Oh, let's do it.
No problem. Could you please kind of raise your right hand? Do you swear affirm the testimony you're about to give in this hearing is going to be the truth, the whole truth, and nothing but the truth?
I do.
Thank you, sir.
Thank you. Again, appreciate your patience. My name is Jesse David. I'm an economist. I was brought in by the South Arkansas Minerals Association to address a couple of points. Obviously, some of the materials that were presented today I had not seen, but I was asked to respond to earlier versions of some of those materials, and I have a presentation that's about 30, 40 minutes that deals with that. The two issues that I was asked to deal with primarily are take a look at some royalty structures in the context of the financial information that's been made public by Standard for the SWA project. And to do that in the context of what I understand the statute requires in terms of fair and equitable consideration. And then second, really a completely separate issue, to provide some comments on the benchmarking study performed by Ernst & Young that I understand was the basis for the 2.5% that Standard Lithium has proposed. So I'm going to just dive right in. Before going into the financials, I just wanted to present what my understanding of a fair and equitable royalty is. And again, you know, I'm not here to interpret statutes, but this is from the discussions I've had with the folks who I'm working with, the understanding that I've gained, that a royalty should reflect a sharing of value in some sense, where value is the return on investment to the producer of the enterprise. It should encourage development, which means that after the royalty is paid, the return on investment should still be positive and competitive with other potential investments, but that the value, particularly on the upside, should be shared between the parties. So the project should stay profitable when lithium prices are low. That's the big risk here, is the volatility in lithium prices. But that the resource owners should benefit when lithium prices are high, because the profits, the extra profits that would be generated in that world wouldn't be due to production efficiencies or the technology. It would just be the vagaries of the lithium market. So that's my understanding. I'm not here as an economist to tell you that that's what fair and equitable means, but that's an understanding that I've reached. Okay, so let's dive right into the financials. I started with the pre-feasibility study. There's an economic valuation analysis presented there. And let me just summarize what's in that study first, and then talk about some of the adjustments that I made. Initially, Standard was expecting a project that would reach 30,000 tons of production per year. They detailed operating costs. They averaged about $4,000 a ton, plus some additional royalties and taxes. So that's all of the actual physical operating costs, including sustaining capital, reagents, labor, energy, everything like that, averaged about $4,000 a ton. They had an assumption of a lithium price of $30,000 a ton in there. We've heard a lot about that, and I'll discuss that more. Obviously, that's critical to the valuation. And then finally, they took revenues and profits from the future and discounted them back at an 8% rate. And if you do all those things, you get a value of about $3 billion. Net present value is what they calculated in the pre-feasibility study, and that translates to a greater than 30% internal rate of return. Obviously, sounds like a great investment. Couple of notes here. That 30,000 a ton lithium price, that's about what the price was at the time the PFS was generated. That's not where it's at today, so that's obviously something we got to look at. One other note I took away from this, that discount rate of 8% is interesting. That, for an early stage company, that's a pretty low discount rate. And what that tells me is that management has some confidence in those projections, right? Early stage companies often use value themselves at discount rates of 12, 15, 20%. 8% is pretty low, and that, in my view, reflects some confidence in those financial projections. All right, so that's where we were about a year and a half ago with the pre-feasibility study. Standard has issued various updates publicly, including some materials that were submitted to this commission, and then there was some more that was brought into the room here this morning that I had not seen before. But I did perform some updates to their valuation model. I took into account the grant that they received or will receive from the Department of Energy for $225 million. That helps with the capital expenditures. And Standard had raised their estimate of the output of the project from 30,000 to 45,000 in 2 phases. A note on that, I think we heard this morning some estimates based on 22,500, which, as I understand it, is phase 1 of the project. I don't know how long it takes them to get to phase 2, but I expect that most of the life of this plant will be operating with both phases if it's built as they expect. And so a lot of the value here would be due to a 45,000 ton per year production quantity, not 22,500. So I don't know why they chose that number, but that sounds like just for the first phase. And the reason why that matters is a lot of those capital costs that are initially spent are going to get spread out over a larger volume, and so the overall cost is going to be lower in the future. Some other adjustments I made to the initial analyses in the pre-feasibility study. There have been some revised estimates of costs that have been submitted and publicized. They're all lower, so they're revising their cost estimates downward, which means profitability and value are going up, at least in expectation. So using all those new assumptions, I calculated a value of $5 billion. So the project went from $3 billion to $5 billion. Now, of course, that's still at this $30,000 lithium price, which is going to be critical here. But if we set that aside for the moment, the estimates of the value of this project have gone up since the pre-feasibility study. Okay, so let's talk about lithium price. As I mentioned, we all know this shape. We've seen this before. There was a spike about 5 years ago. It lasted for a couple of years, and the pre-feasibility study was generated and published right around there where you can see that red circle where lithium carbonate was selling for about $30,000 a ton. So that may have been a reasonable forecast at that time. Currently, we're at about $9,000 or $10,000. There have been some forecasts that take us to higher numbers. I think we heard, it sounds like Standard is expecting $17,000 in the not too distant future. And we heard some higher estimates as well from Mr. Lowry, at least in some of the things that he's published. Nobody knows. But I think most people agree that we're not going to be at $9,000 forever. That's important because as the lithium price goes up, the value of the plant increases dramatically. Because of the large amount of fixed costs they have, every extra dollar of revenue you get translates almost directly into extra profits. There are still operating costs, but a big chunk of it is paid up front. So higher lithium prices generate a lot of upside here for Standard. And I did some analysis to figure out what that looks like. So this line here shows how the value of the project, with all the assumptions I had, varies as lithium price varies. And we can see that at $30,000, which was what was in the PFS, the project is worth about $5.2 billion. On the low end, if lithium prices keep falling, the project breaks even at just over a little above $8,000 a ton. If we're at, if we're at 17,000, which was what the forecast was that Standard presented this morning, you can see on that orange line what that plant's going to be worth, somewhere between $2 and $3 billion. That's where that 17,000 crosses that orange line on the left, on the vertical axis there. So net present value of between $2 and $3 billion if lithium prices are flat at 17,000 into the future. So there's a potential lot of value there on the upside. One thing I would just add on this is the actual value will depend not just on what the global market for lithium is doing, but also what Standard is actually selling lithium for. If they can sign long-term contracts or otherwise hedge, they could make more than the spot price. Now, I think we heard that in some people's view, prices are often less than the spot price. I did some research on this, and it seems that lithium companies often have contracts with battery manufacturers or automakers that have caps and floors, and when lithium price is low, as it is today, the floor will generally be higher than that. Now, how often those are renegotiated and how those terms work, I don't know. But it is certainly possible that Standard will be generating more revenue than the spot price might indicate. Okay, so we've got that value potentially out there. How should that value be shared? And I did some calculations here to see what a 2.5% royalty looks like as a share of the value of the overall project. When lithium price, and I did that based on how lithium prices vary. At a $10,000 per ton lithium price, and by the way, that's lithium carbonate, that's what everybody talks about with in terms of lithium price. The plant, the NPV is about $439 million. If you pay a 2.5% royalty, you're basically handing 14% of the value to the rights holders at a $10,000 lithium price. As lithium goes up, that 2.5 flat royalty starts representing a smaller and smaller share of the value of the project. And it very quickly drops to 5 and then 4 and then 3%. So if lithium prices are at 17.5, I think was what we saw this morning, a 2.5% flat royalty would be granting about 5% of the share of the overall value of the project to the rights holders. So 1/20th of the value goes to the owners of the brine. One other thing to note is that a dollar of royalty doesn't actually cost Standard $1 because it allows, they're not paying income taxes when that's a deduction against income taxes. So a dollar of royalty paid by Standard actually costs them about 74 cents. Something to keep in mind. Well, how could one deal with this issue of the value going up as lithium price goes up? A varying royalty rate can address that. And I think we've seen, and I'll talk a little bit more about that, varying royalty rates that are scaled to lithium price are common in the taxing and royalty regimes. Something else that's common is a royalty attached to profits as opposed to revenue. A sliding scale on revenue accomplishes something very similar. So let's say, and this number doesn't mean anything in particular, but let's say you wanted to grant 1/5 of the value of the project to the rights holders. At a lithium price of $10,000, that's going to call for a royalty of 3.5%. And that would leave a value for the producer of $351 million. If lithium prices go up to $20,000, now you need a higher royalty to get that same share of value. It would take an 11.5% royalty at $20,000 lithium price to have that same 80-20 split. And you could calculate that at any possible lithium price. So that's what I've done here. You could redo this using a smaller share, larger share, but it's not hard to do. Okay, so that's talking about the rate. What about the base? In my experience in doing the research I did here, I find that mineral royalties and taxes, most often what's available publicly actually aren't royalties, they're some form of taxes, are almost universally applied to actual revenues. That makes sense. It shares the risk that might be inherent in deviations of the sales price against spot price. It accounts for non-spot sales due to contracting. It avoids the potential for manipulation of the index, which we heard apparently is already happening, possibly in China. It addresses issues like local market conditions. So here in Arkansas, you're quite close to the output markets, the manufacturers, the battery manufacturers, the auto manufacturers. That's not always true in China. So there may be a premium for lithium sold here as opposed to being sold in Chile or somewhere else. So there are some good reasons, I think, to look to actual revenues rather than some third-party index. And then finally, the question about how do we get access to that revenue information? I mean, my understanding is Standard is a public company. They have to report their revenues. In doing so, there would be no need to disclose particular contract terms. And again, that's my understanding of the way most extraction royalties are calculated and reported. So that doesn't strike me as being a difficult hurdle to overcome. I'm about to move to the second part of my discussion where I want to talk about the benchmarking study. I thought I would just pause and see if anybody had any thoughts. I can wait till the end as well. Keep going. All right, very good. So I took a look at the underlying study prepared by Ernst & Young, which I understand is the basis for this 2.5, or at least one of the main bases for the 2.5 proposal. And I have some issues with it, both on a sort of general level and then on some of the specific calculations that were done and some of the specific choices that were made. At a high level, I think it's important to understand that SWA is going to be an unusual lithium project. The brine is very high quality. It's got a very good location here in Arkansas. It's not the typical asset under the ground. So that's one issue. And if you're going to compare royalties that are paid or taxes that are paid on global lithium projects, I would think you'd want to take into account some of those differences. EY, from what I can see, is not doing that. Another issue is that EY doesn't have any examples of private party to private party royalties, right? They're all governments imposing taxes or in some cases royalties. Governments have different reasons for doing things than private parties when we're talking about attaching a royalty or a tax to an asset. And my understanding is that the statute here is not trying to replicate what governments around the world do. On the specific side, I'll give some examples of each of these, but some things that struck me as problematic. EY is defining different regimes as being market-based or non-market-based for reasons that are not clear to me. And in particular, dismissing what's happening in Chile, which has very high royalties. And that serves to bring the average, when they do it across the globe, down. Another thing they do is any royalty applied to spodumene, they cut it in half. And we'll talk about, I think, why they're doing that and what the impact is on that. And then lastly, there are some choices that E&Y made about which rates to include and which not to include. And generally, from what I can see here, that also serves to reduce the average that they're getting. And I'll give some specific examples of those. First, just wanted to talk about what's special about SWA. This is a slide taken from a recent management presentation that Standard publishes. It's on their website. And on the right-hand side, you can see one of those cost curves. It's very similar to the one Mr. Rankin identified and was discussing earlier today. Each column in that stack, those gray columns, represents the cost, the operating cost to produce of one project around the globe. So we're talking just operating costs, not capital expenditure. Once the plant is built, this is how much it takes to get a ton of lithium carbonate to market. And as you can see, Standard has inserted SWA at the absolute top or bottom, depending on how you look at it, of that curve. Once this thing is operating, it will be the lowest cost project in the world to get a ton of lithium carbonate. So that's accounting for the fact that mines that produce spodumene, somebody has to refine that product. This accounts for that cost. And after those costs are addressed, SWA will be the lowest. That's not my opinion. That's from Standard's internal presentation. And just by the way, on the left-hand side is a chart that compares some of the brine quality of different projects in the U.S., and SWA is up there near the top. The only one that's higher is the tests that they've done in Texas. So we've got high-quality brine, and by the way, I just excerpted some of the descriptors that Standard included in their presentation about the SWA project to talk about why it's different from other projects around the world. It's got high-quality brine, a lot of it. Arkansas is, the Smackover is in a good location. We've got educated workforce, roads, access to energy, the kind of things that you might not have in the middle of Chile or Argentina, for example. Not unimportant is this one that Smackover is strategically located for the American end-use market. So we're avoiding freight costs to get the lithium carbonate to the manufacturers, the automakers in Tennessee and the Midwest that somebody in Chile or Argentina or China, for that matter, would have to incur. So for all of those reasons, these are the kinds of things that put that cost column down at the bottom of that stack for Standard Lithium. And I think it's important to recognize that a lot of those features, some of them certainly are due to the technology that Standard is bringing to the table. Everybody understands that, to the capital that they're bringing to the table. But some of them are due to the characteristics of the brine based on the quality and the location. So that's why a sharing of value here, I think, in my opinion, makes sense. One other chart, this one is kind of the reverse. I got this from S&P, a third-party analyst. And this actually shows profitability. So this is not cost. This is profits for different lithium producers around the world. And this is a few years ago, so obviously we don't have SWA in here. The light blue are brine projects. The dark blue are hard rock projects. And as you can see, the profitability of brine projects, cash margin, is almost universally higher than hard rock projects. The one exception is that Greenbushes hydroxide on the left-hand side. That's an integrated facility that has a mine producing spodumene, and they've got processing on site. They're actually making even more profits from that, even though they are also obviously incurring higher costs. So that just puts the brine hard rock comparison into some context, I think. All right. Now, I'm just going to transition quickly to some of the specific issues I had with some of the choices that Ernst & Young made. I've already mentioned the fact that there are no examples of private-to-private royalty arrangements, but even given, the comparability or non-comparability of the government imposed rates in there, I wanted to look at some of the specific decisions that were made. I mentioned the market versus non-market, or they also call it nationalized versus non-nationalized jurisdictions. Chile, E&Y categorizes as non-market, and they exclude it from the averages that are presented to you in that chart that had 2 to 2.5%. Chile is not included in that. Private lithium producers today in Chile, including some US-based producers, pay a graduated royalty. It scales up, and it peaks at 40% of revenues. Now, obviously, that's very, very high. My understanding is producers there, they're private companies, or at least they're not state-owned companies. They're operating in exactly the same way that they do in Argentina or in other places around the world. So it is not clear to me why you would write off Chile as a non-market example. I do understand that Chile may be transitioning at some point in the future to state interests in the mines, but that is not what's happening now, and the contracts and the royalty rates that are present there have nothing to do with state ownership. So I don't know why E&Y characterizes and dismisses Chile. Obviously, if they were included, they would bring the average up. I just wanted to point out one other market, Zimbabwe, E&Y characterizes as a market situation in contrast to Chile. And I'll just read what E&Y, this is an excerpt from E&Y's presentation, how they describe the situation in Zimbabwe, that according to the Mine and Minerals Act of Zimbabwe, the minerals beneath the soil of Zimbabwe are the property of the president. I mean, I don't know what that means exactly. That doesn't strike me as a market situation. I have no problem including the rates that are paid in Zimbabwe in this average, but if you're going to do that, I don't see a justification to exclude Chile, which is what they've done. All right, so that's one example. I mentioned this issue about converting royalties on spodumene to an equivalent royalty for carbonate, which is what's done throughout the E&Y report. Little background, and then I'll put this in the context of one of the examples that they use, which is the market in Western Australia. In Western Australia, private producers, so they're private companies, pay a royalty of 5% to the state, and in some cases they also pay 1% to native populations, and in some cases they also pay private royalties when some of the land is privately owned. And so there may be up to 11% royalties paid in Western Australia. I got that from a Pilbara Minerals annual report. E&Y looks at those numbers and they say, we're going to just take the state royalty of 5%. So they're excluding the private royalty and the native royalty. So, but set aside the exclusion issue. They then convert that 5%. They essentially divide it by 2. And they say, that's a royalty that's being applied to spodumene. If you wanted to get a royalty on carbonate, it should be half. And they're doing this across any spodumene jurisdiction, which is, I think we heard, the bulk of them. We can get into what the math is there. I think essentially what E&Y is saying is that because lithium carbonate sells at a higher price than spodumene for an equivalent amount of lithium, a royalty should be lower. The problem that I have with that is that Standard is not refining spodumene. If they were, that would make sense to me. And I think just a simple thought experiment can kind of make this a little clearer. Imagine you have a spodumene mine, maybe here in Arkansas, and somebody decided a royalty should be 5%. And then you discover brine right next door, and you're trying to figure out what should the royalty be on whatever is produced from that. Which one should be higher? The low value rock asset or the higher value brine asset? Which one should have a higher royalty? Ernst & Young is saying the royalty on the brine should be lower. I don't follow that logic. Carbonate is more expensive than spodumene, but that's because it's costly to refine. Standard is not refining spodumene. As we saw, they're at the bottom of the cost curve because the brine is very high quality. All right, so that, again, just to highlight that, the bulk of the royalties that are included in those averages have been essentially divided by 2 from what is actually being charged to the producers. And then the final example of a situation is how Ernst & Young sort of picked and chose which rates to include. I already mentioned that for Australia, Western Australia, there's a native royalty that they did not include. There are private royalties that they did not include. And frankly, I mean, I don't know why you would include the government royalty but not the private instead of, if anything, the other way around. Something similar is happening in California. California currently has 2 types of taxes that are charged on lithium. One is a geothermal resources royalty. That's been around for a while, and it's set at not less than 2% of revenue. And then just about a year or 2 ago, they passed a second one called an excise tax, and that's a graduated royalty from $400 to $800 a ton, depending on volume. And just to put that in perspective, at the volume that Standard is expecting, if they were in California, they would be paying $800 a ton. At current lithium prices, that's about a 9% royalty. If you add that to the geothermal royalty, you're looking at somewhere between, say, 5 and 11% in California. Ernst & Young looks at that, and they decide they're going to exclude the excise tax and only count the geothermal tax. And they use the 2% rate. And the justification that they give, I've copied here, they say they deemed it, or some local experts deemed it, a severance tax. And so therefore, they're going to exclude the lithium excise tax from their benchmarking exercise. I'm not sure why that's a reasonable justification. Maybe it is, maybe it isn't. I would point out, however, that Ernst & Young uses as a separate benchmark the tax that's paid in Nevada, which I understand is also can be called a severance tax. So they're using a severance tax in Nevada, they're excluding it in California. I point out one additional thing, which is that I had a look at the application for the Lanxess royalty before this commission, and Standard had pointed to the California excise tax, which is a graduated tax based on actual revenues, as an appropriate benchmark. Now Ernst & Young is excluding that from California. So again, what's the right benchmark here? I'm not here to say, but I am here to point out some of these inconsistencies that I see in the way that analysis was done. All right, so what do I take away from the benchmarking exercise? Finding comparable arrangements to SWA is going to be hard. There just are not very many pieces of information available about private-to-private royalties. On the other hand, it's a high-quality brine in a favorable location, so even if you found one in Chile, maybe you're not drawing a direct comparison. And then I point out one other issue here is that governments have interests when they're setting tax rates that may be different from what the Commission is attempting to do. Governments care about regional development, they care about environmental protection, they care about employment, maintaining infrastructure. I don't know if those are the things that should be the priorities here or not, but those may be different in this jurisdiction. Putting that aside, we do have this information from Ernst & Young. It's public information. And when you look at that, and if you don't do this divide by 2 adjustment that they've done for spodumene, we see a lot of royalties out there well above 5%. Australia's at 5 or above. Canada's around 5. In the U.S., we have California, Nevada, and Utah. There's quite a range. Nevada is around 2, I believe. California, if you include both of those taxes at current lithium prices, actually reaches up to about 11. You've got some in Africa. You've got this huge range in South America if you include Chile, which I don't see why one wouldn't. And then I understand some private leases have been shown to this commission where there were some rates in the U.S. around 10%, perhaps with some deductions. I certainly don't have an opinion about where to go with those numbers, but I think that information should be considered. What I take away also is that essentially all of these circumstances, all of these taxes and royalty regimes around the world, they're paying based on realized revenue, not on some third-party index. There are also, in many cases, sliding scales based on price. California has a sliding scale based on volume, actually, but Canada has a sliding scale based on price, and many other jurisdictions, Chile do as well. Other jurisdictions charge the royalty to profits in basically, as I mentioned, another way to get at the same issue that a sliding scale based on price would do. And then lastly, the association asked me to prepare this chart. This would just be an example of how you could get a value share with a stepped royalty. It's a 20% share, which is consistent with that earlier chart. I don't have any particular view that that's an appropriate share, but it would be fairly easy to do with a stepped royalty, and you could increase or decrease the number of steps. You could raise or lower the share. This is an example of when lithium prices are under 10,000, a 2 or 3% royalty might be appropriate as a share of value. When lithium prices are up near 20 or 30,000, if you want that same share, that same split of value, you need a much higher rate, somewhere in the range of 10 to 15%. And that's all I have. Thank you very much.
Thank you, sir. Mr. Rankin, any other follow-up from your witness?
Don't have any questions.
Mr. Honey?
Thank you, Judge. Dr. David, I am Bob Honey. I'm sorry I didn't get a chance to meet you previously.
Hello.
Yeah. We were just provided this information shortly before the hearing started, so I'm kind of trying to digest it as we go along, and I apologize if my cross-examination is a little disjointed as a result, but it's tough to do both those things at the same time.
Quite all right, I understand.
Yeah. I didn't have a chance to look at your CV. You're an economist, I think, is that correct?
Yes, sir.
Okay. And I don't know what experience you have specifically with respect to lithium. Is that something you've done historically, or is that specific to this assignment?
No, my experience is in valuation. I've worked in various mining industries. I did some work in coal, but I've never done any work in lithium until this project.
Okay. You indicated that, I'm trying to think of the correct way to do this, but the essence of it, as I understood it, is that your client had told you that the task is to evaluate a sharing of profits, a sharing of the value of the enterprise. Did I understand that correctly?
One of the tasks was to evaluate royalty structures in the context of fair and equitable, and the consensus was that that would be some kind of sharing of the value of the enterprise.
Well, you understand that at the end of the day, what we're trying to do is put a value on brine at the wellhead.
No, I thought the royalty would be applied to the saleable product.
Well, let me ask you this. You're not a lawyer.
No.
Have you read the Brine Act?
I've read the parts about compensation.
Okay. But you haven't read the rest of it?
No, I don't think
so. You haven't read the parts about that the requirement is to put a value on the brine?
I don't recall that.
Okay. And you haven't read the pieces of that talk about, the fair value being 1/8 of the value of the brine?
I think I've heard the 1/8 number, that ratio. Okay. Yeah, I've certainly heard that.
Yeah. How about integration? Is that a term you're familiar with?
Are we talking about bringing together the owners within a unit?
Sure, the Brine Act.
Yeah, I'm familiar with that.
Okay.
As a layman.
Yeah, and you understand the Brine Act gives the commission authority to integrate, to force pool mineral owners, brine owners. You understand that?
Again, as a layman on that, I mean, I have some understanding, yes.
Okay. And you understand the Brine Act requires that when a mineral owner is integrated or forced pooled, they are given an option. They have to make a decision, but they get to decide what the decision is. And the option is essentially to lease for the royalty that's going to be hopefully established by the commission, or to participate.
To opt in or out, I have some understanding of that, yes.
Yeah, and you understand that by participate, that's not the cost of the plant. That's just the cost of the wells.
My understanding of participate was they could either opt into whatever the royalty arrangement that the commission finds or do their own. Is that not what we're talking about?
No, not even close. Anyway, getting back to the integration, are you familiar with the fact that the Brine Act provides that if a mineral owner elects to participate, they can choose between taking their share of the brine in kind or selling it, getting the value of that brine? Are you familiar with those provisions of the Brine Act?
Now we're outside of my expertise here.
Okay. And are you familiar with the fact that the Brine Act says that if an owner elects to participate and sell his share of the brine, he is entitled to be paid at a number, the value of the brine, which is calculated at 8 times whatever compensation this commission decides is appropriate for lithium?
Yeah, I probably shouldn't even be discussing this. I'm not familiar with these terms.
You're familiar with 12.5% times 8 equals 100%, correct?
I can do that math, yes.
Yeah, okay. And so if compensation is 12.5% and a mineral owner participated, they would be paid 100% of the value of the finished product.
I mean, now if what you're asking me is 12.5 times 8, 100%, yes. Everything else you just said, I have no idea.
You know, then it would be absurd for a mineral owner to be paid for the raw material, the brine, a price that is equal to the value, 100% of the value of the finished product. You would agree that's just absurd, correct?
Are you saying that's what's happening? I'm not understanding. You're saying somebody's getting paid more for brine than they are for carbonate?
No, I'm saying the finished product, yes, exactly. I am saying exactly that in your model.
That's not my model. I have no idea what you're talking about.
Well, a 12.5% royalty times 8 is 12.5 times 8 is 100, correct?
I'm with you on the math.
Okay. And if the integration statute says that the value that's to be paid to the brine owner is 8 times the royalty, and you set the royalty at 12.5%, then a participating owner would be entitled to be paid 100% of the value of the lithium carbonate.
I mean, if you're telling me that's how it works, I don't interpret those statutes.
I'll move on. You also talked about sharing profits and value of the enterprise. And I'll go back to oil as an analogy. Can you cite me a single instance in which the person who owns the oil in the ground gets an ownership interest in the oil refinery?
I mean, I don't know how oil refineries are owned.
Would it make sense that a person who owns oil would get a share of the profits that are made by the oil refinery?
I mean, I have no idea.
Okay. So really what's happened here is your clients told you to do it a certain way, and you've calculated the profits that this enterprise is going to make after they get the brine out of the ground and then process it. And that's what you were told to do by your client.
What I was told was that fair and equitable could be viewed as sharing the value of the resource. That's what I was told.
Okay.
The math that I did on my own, and I presented it here.
And sharing the value of the resource, how does that get transformed into sharing the value of the enterprise, like the whole plant?
Well, I don't think the association or anybody else is asking for the value of the whole plant. They're asking for a small part of the value. That's the sharing.
Yeah, they want to share in the profits of the entire enterprise, right?
Well, yes, the brine enables the profits, and they're asking for some share of that. Yes, that is my understanding.
Okay. And your belief that the that is a proper interpretation of the Bryan Act is simply what your client told you.
I just haven't, I'm not a lawyer, I just have an understanding of that.
Okay. Now, correct me if I'm wrong, but a brine owner would expect to be paid on brine that is produced regardless of whether SWA makes a profit. Would you agree with that?
Well, yes, and that's, I think, why a sliding scale makes sense. I mean, but generally, royalties are paid independent of what the market is doing on that day, except for the fact that they could be tied to price.
Well, if you're going to share in the profits, shouldn't you share in the losses?
So if you're saying if lithium prices went below 8,000, I mean, I agree, royalties should be quite low if lithium prices are below 8,000.
No, with your model, if you're sharing in the profits, you should share in the losses. So if lithium prices go low and the enterprise starts losing money, the brine owner should start paying money, shouldn't they?
Once this project is built, if they're not making an operating profit, that means the entire global lithium industry is out of business. That's very hard to imagine. I mean, Standard will be at the absolute bottom of the cost curve, the best part of the cost curve.
Well,
I mean, the scenario of them losing money on an operating basis, that makes no sense to me.
Well, my point is that you're asking this commission to give the brine owner a share of the profits, and I'm saying, well, okay, a sauce for the goose. If you want to go down that road, if you're going to share profit, shouldn't you share losses?
Everything here is being done in expectation. All we have is the expected value of the project. And my understanding of what the statute is asking for, one interpretation of that is to come up with a royalty structure that in expectation shares that positive value. Nobody's been going to be calculating profits on an ongoing basis. I mean, there are jurisdictions where royalties are attached to profits. That does exist. I think there are some places in Canada, there are places elsewhere, and then the mining company shows that they're losing money, and if that number goes negative, they don't pay royalties. But my understanding is nobody here is asking to do that.
Yeah. Well, would you agree with me that anyone who expects to share profits is also asked to share risk?
Well, yes, that's I think what a sliding scale embodies.
And how much money are the brine owners putting at risk?
Well, I understand they're putting their land at risk. Their access to the minerals under their land.
But they're under your model, they're guaranteed to be paid no matter what, correct?
Well, that depends on the sliding scale. I mean, I could see a scale that had zero. If lithium prices drop below $5,000, that might make sense. But I don't think anybody's proposing that.
Do you think the mineral owners in South Arkansas would agree to a model, a royalty model, that says you are taking a risk that you won't get paid anything?
If lithium prices were below 5,000, sure, I think that wouldn't be unreasonable.
I would love to meet a royalty owner that says, yeah, I'll take a risk, I don't get paid anything.
Like I said,
I haven't met any.
I have, because I've seen jurisdictions that charge based on profits, and when profits go negative, no royalties are due.
And are these jurisdictions within the United States of America?
They're jurisdictions in the E&Y study that I reviewed. I forget which ones they are.
You talked about your criticisms of the EY study, but I think I wrote this down correctly, that you had criticisms of the EY study, correct?
I did.
Yeah. But you're not here to say, well, instead of the EY study, we should do this instead.
I'm not.
Yeah. And I think you said you don't have an opinion about where to go from here.
I'm just presenting the information. I'm not making any recommendations.
But you agree it's appropriate to come up with fair and equitable compensation that is competitive in a global environment?
Sure.
Sure. But you don't have a suggestion about where we get the data if the EY study is not something that's appropriate to look at?
Well, I haven't said that the data is inappropriate. The concerns I had with what Ernst & Young did related to how they used that data, transformed it, and aggregated it. You certainly could look at, for example, I mentioned the tax that exists in California, that everybody can see what that is, 3 to 11%. You could go to Canada, you could go to Chile, you could go to Argentina. I mean, anybody can do any of those things. But I just don't have a recommendation about which one is the appropriate benchmark.
Yeah. And I think you heard the testimony during the original presentation that SWA has taken over 1,000 leases in Texas, and the compensation there is less than what is being proposed here. Did you hear that testimony?
I must have missed that. I'm sorry.
Okay. And that's private to private. It's the United States of America. It's just here 100 miles from where we sit right now. Is that an appropriate benchmark?
If you're saying, is it more appropriate to look at private leases in Texas than Zimbabwe and Argentina? I absolutely would agree.
Okay. Fair enough. And then getting to the index versus actual. If you go with actual, the brine owner will not get paid until there has been actual sales, correct?
Well, my understanding is that would be true whether you're using an index or anything. You got to wait for something to be sold, sure.
No, okay, and that's incorrect. One of the aspects of the proposal is that by using an index, we will pay upon production, not sale.
Okay, I mean, I don't know how long it takes to move the stuff from the warehouse to a truck and ship it off. I don't imagine it's very long, but if that's the proposal, okay, that's fine.
There was
I mean, if you're using actual revenues, you could do the same calculation. You could apply the revenues on the date of production, but I mean, as far as the timing goes, I don't have any view about that.
And then there was testimony during the original presentation that negotiated prices, actual sales prices, are less than the index price. Do you know anything about?
Are you representing that that's going to be true for Standard?
That was a testimony.
My understanding is, again, I don't have any view about what Standard's actual contracts are, okay. But my understanding is that lithium producers often reach agreements, long-term agreements with automakers and battery manufacturers that often have price floors. And the only reason you have a price floor is if the spot price is below the price you're actually getting. Mm-hmm. Now, they have price ceilings or caps as well, but when lithium price is low, it's the floor that matters.
Yeah. And this, your understanding, that comes from research you've done since you agreed to take on this assignment, correct?
Excuse me.
Yeah.
Yes, that's right.
Okay. And how long ago were you first contacted about taking on this project?
6 months, maybe.
And so all of your lithium-specific knowledge is what you've acquired specifically for this project within the last 6 months?
Yes.
Okay. You're from California, I think?
Yes, sir.
Have you ever been to Arkansas before today?
I think once.
Good. Well, welcome back.
Thank you.
Sure. All right. I'll pass the witness.
Thank you, Mr. Honey. Mr. Rankin, any follow-up?
Dr. David, Mr. Honey is a good lawyer, and he's good at making his arguments through questions, and maybe made a point that should be saved for some type of closing argument, but in this case, maybe conflating the brine owner and the take-in-kind owner who might be entitled to an 8/8 distribution in certain circumstances with the actual language of the statute, which commands this commission to determine the royalty on additional substances. It actually starts out with, in addition to other amounts due, that is, anything due on a brine royalty, account on a fair and equitable basis for the additional substances. In light of that language, does your report do that?
I should stay away from interpreting statutes.
Well, we can call that a rhetorical question. Let me ask you this. Did you, we asked you to create a model that looked at the revenues that that Standard Lithium would get if they sold their product on the open market, and make a comparison that if we were to present to this commission that we should pick a point where we share the value. And we pointed out that we wanted to base that on the actual sales and price of lithium. You did that in your project, did you not? In your report?
I created those curves, yes, and did the calculations.
And you're aware that Standard Lithium basically proposed the same method in its October 4th, 2023 application, are you not?
There was something very similar there where they proposed a graduated royalty that would increase with lithium price based on actual revenues received, not an index.
So at some time they thought your method or the gist of it was a good idea.
Their percentages were well below the percentages that I showed on that chart, but the methodology was in some ways similar, yes.
And so you basically took the information that we gave you, asked you, within a certain universe to create the presentation that you just did.
Well, you asked me to investigate those two questions, the royalty structure and how that impacts or depends on the value of the project, and then to address the benchmarking study. I wasn't given any very specific directions about what my conclusions or methods should be. So what I showed today was my interpretation of what you were asking me to do.
And unlike other studies that we've seen, you certainly weren't asked to create a study that supported a 2.5% royalty.
Or any number.
Right, okay, that's all.
Mr. Honey?
Nothing.
Commissioners, any questions? Mr. Bengal?
I think on your summary slide, where it showed Australia and the various countries' royalties.
Let me just, there we go.
Right there. On the Australia royalty, 5-6%, that, what is that on in your understanding?
Revenues from sale of, I believe it's spodumene.
And what's the cost of spodumene per ton in Australia?
I don't know about Australia.
Well, let's say a world.
Somewhere between 500 and 1,000, I think, is the going rate.
So they're getting 5% of $1,000 per ton spodumene concentrate in Australia, as opposed to 5% of lithium carbonate value.
Well, it takes 7 tons of spodumene to be equal to 1 ton of carbonate.
Sure, but the 5% is based on the $1,000 per ton spodumene concentrate in that Australia example there.
My understanding is based on the revenue.
Of the concentrate.
Yes, they're selling concentrate.
Right.
Yes.
Most of it goes to China, but 5% is on that, not the lithium carbonate value. Are the others based on the lithium carbonate sales or the concentrate sales?
Well, if it's a brine operation, which would be California, Chile, Argentina, it would be brine. If it's a spodumene project, it would be the rock, the concentrate.
In the California example, what have they valued the brine to be that they're paying? Is that 11, what was that, what percent? 11%?
California, I can pull that one up. California, if you add up the two royalties or taxes that are paid, it averages out to be somewhere in the 5 to 11 range.
Right, of what? Of a value of what in California's?
Carbonate.
The carbonate.
Yes,
Is that being processed in California at a plant or at the,
I believe so.
okay. And no further questions? That's it.
Any other commissioners? Based on the line of question from the commission, any follow-up from council?
Not from
Mr.
me.
Rankin, Mr. Honey?
No.
All right, next witness, Mr. Rankin?
Judge, at this time, I'd like to have the Vice President of South Arkansas Minerals Association, Mr. Eamon Mahoney. He'd like to make a statement to the commission just on behalf of the association.
Sure thing. Tony, do you swear or affirm the testimony you're about to give in this hearing is going to be the truth, the whole truth, and nothing but the truth?
I do.
Thank you, sir.
Good morning. Commissioners, Director York, Judge Moulton. My name is Eamon Mahoney. I'm Vice President of the South Arkansas Mineral Association. I'm a sixth-generation Arkansan, an Arkansas native, an Arkansas resident, and I'm here because the minerals involved are held by a family-run business in El Dorado, Arkansas. We need you to set a fair and reasonable rate for these minerals, and we need you to not wait for Standard Lithium or any other applicant to propose a fair and equitable compensation. Our group was formed in 2017 to deal with this issue. That was a long time ago. At the beginning of 2017, Barack Obama was still president. We've been involved in a number of hearings involved in this issue that's dragged out over the years. And I think that the experience from that is that if we're dependent on Standard Lithium or some of its co-applicants to do the right thing and propose a fair and reasonable compensation method, we're going to be having these hearings for years to come. During the course of all these proceedings, Standard Lithium and their co-applicants haven't really shown evidence, as far as I've been able to tell, of profitable extraction or specific financial information that they could, or any specific financial information for their projects. And it sure looks to me like they've done that to make it harder for you to set an actually fair and equitable rate. Commissioners, I know that the longer this drags on, the more pressure you're going to feel to take the easy number that they're putting in front of you on that day. And I know you want to get these projects moving forward. We want to get these projects moving forward. I think the strategy in just trickling very slightly up here is that they can keep wasting your time, our time, the public's time, and everyone's money with unreasonable and unsupported numbers. Pressure will eventually get to you, and the mineral holders won't get a fair deal. So what I'm asking you today is to use the information that Mr. David, that the Mineral Association has given you to set a fair and equitable royalty rate. And don't feel bad that that hasn't come from the applicant. They've had ample chances to be transparent about how profitable the extraction will be, and they've shown no interest in doing that. If you don't feel comfortable setting a royalty based on what we've put before you today, then that's fair and equitable. I ask you to make it very clear in your order what is needed for you to have the evidence to make your decision. And commissioners, please don't let this pressure tempt you into taking this easy number that's sitting right in front of you. Please push this through to a fair and equitable conclusion. Thank you.
Thank you, Mr. Brown. Rankin?
Oh, sorry. No, I'm done. No.
Any additional questions for Mr. Mahoney?
I don't have any questions just based on his statement. It was certainly just a statement of the association. I don't have any questions for him.
All right. Mr. Honey, any questions for Mr. Mahoney?
Well, just for this particular witness, I was just curious whether he or his family own any minerals in the Reynolds brine unit.
I believe we do, but I might have to subject to check. I haven't looked at all of the records recently.
That was it.
Mr. Rankin?
Judge Moulton, Dr. David was my only fact and opinion witness, and with the statement, I don't have anything further from this objector.
Let me ask the commissioners, any questions for Mr. Mahoney?
I got one thing I want to say. I don't want you to get any false impressions that we're just getting tired and gonna make a decision based on that. Because I know I take my job very seriously, and I've always done the right thing, not because I'm tired, because I'm not, or I'm tired of hearing testimony that I like or don't like. I always do what I think is right. And anytime anybody thinks I'm not doing that, I can step down from here and somebody else can have my seat, okay? there's been a lot of consideration going into this. We've been working on this a long time, as have y'all. Y'all have met with them. Y'all haven't made any concessions. You know, that's what this commission wanted, was y'all to work it out, but y'all couldn't do it. And so we got to take the information that we get from both sides, go with something to work, and the main thing is to keep the ball moving, not take the easy thing that's in front of us. That's not a fair statement to us, in my opinion. Nobody up here's took that. I mean, I get $85 a day for this. It won't even hardly clean my suit. Okay? I'm just saying, it won't clean my suit and buy my gas. But we have a job to do, and we put a lot of time and effort into that. We really do, and I need you to know that. And there's also people that aren't in y'all's group that we also represent. State of Arkansas is a big state, but, you know, this project, and I wasn't gonna say this, but on the heels of what you said, I am. You know, we also have to consider the people that can't afford to be here. The mom and pops, the restaurants, the severance tax that goes to the cops, the police, the firemen, the schools. I mean, there's a whole bigger picture. I have all the respect in the world for royalty owners. I mean, I do. I respect them coming to our state trying to spend $3 billion. And we don't take that lightly, and we're not taking the easy way out. I don't want you to think that by any means, because if you do, if you think that's what I'm doing, I'll walk out that door right now, but I'm not. But if anybody wants me to, I don't have a problem with that.
Commissioner, thank you very much for that. I'm not saying that you have done that. I'm just worried that reading the press and hearing everything, that there's pressure, and I appreciate you doing the job that you're doing, and I want to thank you for that and encourage you to keep doing it, and tell you that we appreciate you operating up on behalf of the public here.
And I will say, I've been asked several times, you know, are we getting pressure from the state? Are we getting pressure from elected officials? Are we getting pressure from anybody? And I'm not. You know, I'm getting a lot of pressure, but it's from myself to get this right and to get it done where, you know, the best we can for what's fair for everybody. You know, Mike Davis said, when we walk in these hearings, we lay our friendships at the door. And we come in here and we take care of business, we do what's right. But when we leave, we pick our friendships back up and we go on, you know. So anything that's said or happens has nothing to do with any of us being friends. It's just everybody doing the job they have to do. It's not taking the easy way out.
Thank you, sir. I appreciate it. I wasn't trying to impugn your integrity or anything, just trying to make sure that somebody was pushing back from the other side.
I understand. I just want everybody to know our side too.
Mr. Mahoney.
Yes, sir.
You're vice president of the member. Give me a number you think the royalty ought to be. Just a simple number.
I think that the sliding scale from Mr. David's last slide is appropriate. I personally like the idea of a sliding scale with prices that are potentially volatile and, as I've learned this morning, potentially manipulated by the Chinese. So I think that what we've done here is given something that appropriately shares some of the risk. You know, we are giving up something. We're giving up valuable minerals. We're giving up we're giving up little pieces of Arkansas here and sending it, you know, all over the place, in the form of this lithium that maybe one day might be even more valuable somewhere else. So that's what I think is something that looks like a fair and reasonable compensation method.
And so you're saying if you had your way, it'd be a sliding scale?
Yes, sir.
Okay. Thank you very much for your comments.
Any other commissioners? Based on the line of question from the commission, any follow-up, Mr. Rankin?
No follow-up from from Sam.
Do you rest as well?
going to rest on our objection. I do understand that there may be some other objectors that wish to read their objections.
They are, but I think, before we do that, Mr. Honey, are you going to have any rebuttal, any follow-up from you, sir?
No. No.
All right, I believe what we're going to,
I got one question for you, Mr. Honey. Let me find the question. Just here it is. This sheet, the total brine owner's compensation. You got a circle at the bottom of the page that says 3.01. What's that definition?
So that's just a pro forma calculation based on current prices?
In the brine fee.
Yeah. Using our proposed methodology and then doing a pro forma calculation for a hypothetical mineral owner who owns 160 acres. And it includes, now bear in mind, it includes the 2.5% that we're proposing here today for lithium, plus I call it a brine fee, the $65.14 an acre that's required whenever you produce brine.
Okay, the 65, let's round it to 65 an acre.
Yeah.
That's land leasing, that's not royalty.
We went through this, the last time. What do you do? I mean, it's something that has to be paid. Do you call it land leasing? Do you call it a royalty? I hear what you're saying, but it's still something my client has to pay when they pull that brine out of the ground.
I understand. I was just trying to make it clear that it's not 3, it's 2.5, and then a land charge on top of it. Is that correct?
You could look at it that way, sure.
Thank you, sir.
any other questions from the commission? If not, it is on the cusp of noon. The commission's going to go ahead and break for lunch. I will remind everybody again, any folks that came in late, we will be hearing public comments after we reconvene. In order to comment, you have to fill out a comment card. There is a table in the back with those cards. If you want to comment, fill it out, put it in that box. And when we reconvene, we will get into the comments. And then once the comments are completed, I'll call the evidentiary part of the record down unless there's any rebuttal from any of the parties. And then the commission's going to go ahead and deliberate. With that, Mr. Chairman, how much time do you think? 45 minutes? An hour? Lunch?
Hour and 10 minutes. Hour and 10 minutes.
An hour and 10 minutes for lunch. We'll be back at 1:10. We're off the record.
record this afternoon.
All right, good afternoon, everybody. Hope everyone enjoyed lunch. I've got a few housekeeping matters as it relates to public comments. First, I want to go through and incorporate into the record the written comments that have already been provided. The first one I want to take note of is from Mr. Hans Burrow, dated May 22nd, 2025. And this is an objection to the application. The next one that I've got is BRP LLC. There's not a date on this one, but again, this is an objection to the application. I've got Southwest Arkansas Minerals, Association objection dated May 23rd, 2025, which has a number of attachments and exhibits associated with that. That's also incorporated into the record. I've got a letter in support from Mission Creek Resources LLC, dated May 22nd, 2025. I've got a another undated, I believe, letter on Exxon Mobil letterhead from Mr. Remy Wasso. That's incorporated into the record as well. I've got a letter dated May 27th, 2025 to Director York. And I'm not certain who authored this one.
Holly Foote.
I'm sorry?
Holly Foote.
Holly Foote. Thank you, Director York. That's incorporated into the record. I've got a letter dated May 16, 2025, Montague Joint Venture LLC. That's incorporated into the record. And then I have another one dated May 22nd, 2025, on Weyerhaeuser letterhead. That is also incorporated into the record, authored by Mr. Blower. Have I missed any other written objections that you are aware of, Director?
That's all that I'm aware of.
All right. Any other written objections, not verbal objections or verbal support, that I may have overlooked that somebody has submitted that's assembled here this afternoon? For the record, I don't hear anything. Now, I do have a couple of individuals that want to read into the record what their written comment was. I think I have at least one. Is that right, Mr. Rankin? Two. Would those folks be so kind as to come on up and sit behind their microphone and go ahead and read into the record? Could you identify yourself, please, sir?
My name is Grant Summers. I'm here on behalf of BRP LLC, which has filed a written objection. Just very briefly, I appreciate the commission accommodating our request to appear. We support the objection of the Royalty Owners Association and the evidence that's presented here today. BRP LLC is a subsidiary of Natural Resources Partners LP. NRP is a master limited partnership headquartered in Houston, Texas, that owns over 13 million acres of mineral rights across the United States. NRP's primary business is management and development of its mineral rights, which involves leasing to mining companies, oil and gas operators, and various other natural resource developers. BRP has leased over 41,000 mineral acres that it owns in various counties across southwest Arkansas for development of lithium. BRP believes that the sole royalty rate of 2.5% as proposed by the applicant fails to adequately provide fair and equitable compensation for the contribution of mineral rights to the project. Since 2020, BRP has executed leases with royalty rights exceeding the proposed 2.5% rate in the Smackover Formation for lithium production in both Arkansas and Texas, indicating that operators can absorb these additional royalty rates. BRP believes that the most fair and equitable approach for a royalty rate should be an escalating royalty where the royalty rate elevates as the LCE index prices increase. Since 2020, LCE index prices have varied from $9,000 per ton to $70,000 per ton. It's BRP's philosophy that because of this global volatility, the operator and the mineral owner should share in the burdens of a bad market and the successes of a good market. To properly apply this approach, The BRP proposes the commission establish a sales price that receives a minimum royalty. For example, when the LCE index price is between 1 cent to $10,000 per ton, a minimum royalty rate of 4.5% be applied. And then thereafter establish royalty increases that correspond to changes in LCE index prices. For example, for every $10,000 per ton increase in the LCE index price, the royalty rate could increase by a minimum of 1.5 times over the lower tier of royalty rate. For this proposal appears fair and equitable and aligns with the proposed royalty calculation and the economics submitted by the applicant. We appreciate your time today.
Thank you, sir. Hold on a second, just in case the commission has any questions. Any questions, commissioners? Thank you very much.
Thank you.
Sir, would you be so kind as to identify yourself for the record?
Yes, sir. Thank you, Commissioners. My name is Jackson Braswell with Weyerhaeuser. As previously noted in our objections to the applications in 2023 and 2024, Weyerhaeuser Company has been operating in Arkansas since 1956, nearly as long as brine has been known to be of value here in the state. We have 673 employees and own 1.2 million acres of sustainably managed timberlands here. In addition to our Southern Timberlands headquarters in Hot Springs, we operate 2 mills, a nursery, and have 4 operations offices in Arkansas. We also recently announced our plan to invest approximately $500 million to build a new state-of-the-art timber strand facility near Monticello and Warren, creating 200 high-quality jobs once fully operational in 2027. Weyerhaeuser has been tracking the developing lithium extraction potential in South Arkansas for the last 5 years, and we believe it could provide a big economic benefit for the state while being done in a safe and responsible manner. Since the last hearing on this matter, Weyerhaeuser has continued to see offers on nearly 60,000 acres of brine minerals within the Smackover Trend of South Arkansas. Weyerhaeuser has been able to review offers from several developers interested in our acreage here in Arkansas, as well as our mineral lands in Cass County, Texas. With these real-world offers from major companies in mind, we do not believe that the lithium royalty rate proposed by the applicant under consideration here fairly and equitably represents the interests of private property and mineral owners' interests in Arkansas. We know that AOGC works diligently to determine fair and equitable compensation in cases such as this, and simply put, a proposal of 2.5% royalty with further deductions to such amounts being allowed is unreasonably low and by no means equitable. The current market for lithium royalty rates is much higher than what is being proposed in the application, and Weyerhaeuser has received offers ranging anywhere from 3% to 10% cost-free. We understand operators of these projects and facilities must be profitable. However, it is apparent from where we sit that the applicant is attempting to take advantage of what they perceive to be a regulated system to maximize their own profits at the expense of the mineral owners. Similar to the previous proposals by the applicant, this proposal would not be in line with the dynamics of the market or the value proposition of lithium moving forward, given the growing demand and use both domestically and abroad. Thank you.
Thank you, sir. Any questions, Commissioner?
You said y'all have been offered anywhere from 3% to 10%?
Yes, sir.
Do you have that in writing?
I personally do not. Not here today.
Thank you, sir.
I got a question. So 10% of what? Finished product of the bride, or 10% of what?
So I am the public affairs manager. So let me look back to my my minerals guy back here. What do you got, Seth?
Thank you, sir.
Thank you. All right, that concludes the written comments that have been provided. Now I am going to gravitate into the request for verbal comments. I do have a stack of them, and again, I will note if you want to make a verbal comment, please fill out one of these cards if you have not done so already. They are in the back of the room. You can put them in the box. If I go through all of these comments and we give you all the time in the world, we are going to be here all afternoon because the stack is so thick. So I'm going to limit everybody to 3 minutes. Obviously, if the commission has some questions after you're done with your verbal comment, They may ask them of you, and that, of course, is not going to count against your time. But I would respectfully request that you take 3 minutes at a time and just say your piece then. Christoph, I think if you're in the middle of trying to make a point, we'll extend that as well. But 3 minutes, hopefully we'll be able to do it and accomplish it. So the first card that I've got is Valerie Clark. We're going to have them stand at the microphone back there. Is Valerie Clark. And ma'am, if that microphone is too high, okay. All right, go ahead, ma'am. Please proceed.
Okay, thank you. Thank you, Commissioners. My name is Valerie Clark, and I'm the County Judge for Lafayette County. And I realize this is a royalty hearing, but I'm here to talk on the economic development and impact it could have for Lafayette County. I'm here to express my support for the continued development and regulation of lithium production in southwest Arkansas. And to highlight its substantial economic impact on our region. Southwest Arkansas is uniquely positioned to become a leader in domestic lithium production, thanks to its rich natural brine resources. As demand for lithium continues to grow due to its essential role in electric vehicle batteries, renewable energy storage, and modern electronics, this region has the opportunity to play a pivotal role in advancing both our local economy, and national energy independence. The economical benefit of lithium production in our area are already becoming evident. The industry has brought significant investments to Lafayette County, creating good-paying jobs for local residents in engineering, construction, maintenance, logistics, and environmental science. Local businesses from restaurants to equipment suppliers are experiencing increased demand, further stimulating the regional economy. Moreover, lithium production represents a long-term economical engine for the state. With the appropriate regulatory framework and support from the commissioners, we can assure that this industry grows responsibly, benefiting both current and future generations. It's crucial that we continue to balance economic development with environmental stewardship, and I'm confident that Arkansas can be a model for substantial resource development. I urge the Arkansas Oil and Gas Commission to continue fostering a regulatory environment that supports lithium production and transparency for our communities. Your leadership is vital in maximizing the positive impact this industry can have on this region. Thank you for your attention, and I appreciate it.
Thank you very much, ma'am, for your comment. Commissioners, any questions? Thank you, ma'am. Next card I have is Opal Anderson. How are you, ma'am?
All right, Hurley. Good afternoon. I'm Opal Anderson, the superintendent of Lafayette County School District in the city of Louisville and Stamps. On behalf of the Lafayette County School District, I would like to express our full support of the lithium project and its plan to establish a presence in our city and community. We believe that the lithium project brings valuable economic development, job opportunities, and community growth to our region. More importantly, we see tremendous potential for collaboration between the lithium project, our local schools, and area businesses. Lafayette County School District is eager to partner in ways that can enhance our educational programs, create career pathways for our students, and contribute to the overall well-being of the future of our community. Since the beginning of the lithium project, they have come in and played a vital role in partnering with our school district and supporting our school. They have provided a variety of resources such as a backpack drive for our elementary students, They've given school supplies for our K-12 students, appreciation lunches for our staffs, and they have provided donations to both our academics and extracurricular programs. They have participated in our parent and family night engagements. At one time, they brought in a STEM project to showcase and let our students make coasters and things for their parents at our parent and family engagement nights. I've been in a lot of collaboration with Ms. Valerie Smith about enhancing our STEM programs in our school system, as well as we've been talking about providing a food program to help feed the students of our community. So, as previously stated, Lafayette County School District supports this application, and we look forward to continuing to partner with the Lithium Project. Thank you.
Thank you, ma'am. Commissioners, any questions? Thank you, ma'am. Next card I have is Florence Metters.
Good afternoon, and thank you for the chance to speak. My name is Florence Metters, and I'm the Program Manager for the Lithium Regional Innovation Cluster, or the LRIC. We're a federally supported initiative helping to grow the lithium economy here in southern Arkansas by supporting startups, entrepreneurs, and workforce development efforts. I'm also a lifelong Arkansan and someone who's deeply invested in seeing this region thrive, not just through outside investment, but by creating opportunities that our local businesses and families can be part of. Through the LRIC, we're currently working with over 60 companies, many of whom are here in southern Arkansas, who are ready to step into this growing supply chain, offering services from mineral testing and engineering to logistics and site development. The Southwest Arkansas Project is a big part of what makes that vision possible. Projects like this are what move our region from potential to progress. Listening to the small business owners I work with daily, I can tell you there's a real sense of hope building around what this industry could mean for our future. I understand that striking the right balance with royalty terms is important, and I appreciate the effort that's gone into revisiting this proposal, especially the 37% increase since the last hearing. That tells me the parties involved are listening and working in good faith. My ask today is simple. I hope we can find a path forward that supports both economic development and long-term benefit to the state. I truly believe this is a chance for Arkansas to lead, not just in resources, but in how we build partnerships that last. Thank you for your time.
Thank you, ma'am. Any questions, commissioners? Thank you, ma'am. Next card is Kelly Suter.
Thank you for the opportunity to speak in support of Smackover Lithium's application today that, when approved, will ultimately lead to significant investment in Southwest Arkansas. I am Kelly Souter. I'm the community developer for the city of Magnolia. As a longtime resident of Columbia County, I've experienced firsthand how good corporate citizens can make a meaningful difference in small communities. According to the Encyclopedia of Arkansas, when oil was discovered in South Arkansas in 1921, brines were considered a worthless byproduct of drilling, and the saltwater was a nuisance for the oil producers. Then something happened in South Arkansas. Chemists working for what is now the Arkansas Geological Survey discovered that the brines in Southwest Arkansas had bromine content 70 times greater than that of ocean water. A new Arkansas industry was born. Companies that opened over 60 years ago with as few as 36 employees initially now provide more than 1,000 jobs direct here in South Arkansas. According to the Economic Policy Institute, for every direct job in the bromine industry, 6 indirect jobs are created. We see this multiplier effect in our communities daily. The bromine producers not only provide jobs that support our families, they provide philanthropic investment that advances our qualities of life. Today, something is again happening in South Arkansas. The brines of Southwest Arkansas are once again more in the spotlight. corporations like Smackover Lithium are willing to make significant capital investment in Arkansas because of the lithium content in the saltwater that was once considered a nuisance. A new Arkansas industry is awaiting birth. And as history has shown us, we know that because of the Smackover Lithium investment, our communities will enjoy positive economic impact through direct and indirect jobs. Because of the Smackover Lithium investment, our communities will benefit from the advancement to our quality of life through philanthropic engagement. Our children and our grandchildren will have more reason to remain in our communities because of the opportunities Smackover Lithium investment will provide. I hope we can make this request forward, we can move this request forward, and perhaps one day my granddaughter will stand before another commission and support a formation opportunities, and she will be able to say something is again happening in South Arkansas.
Thank you, ma'am. Apologies for messing up your name. Commissioners, any questions? Thank you, ma'am. Next card I have is Corey Keith. Is Corey Keith present? Apparently not. Rachel Jenkins?
Thank you for the opportunity to speak today. My name is Rachel Jenkins, and I serve as the Executive Director of the Magnolia Columbia County Chamber of Commerce. I come before you today to express my support for Smackover Lithium's royalty application. This application is a statement about investment in Arkansas and seeks the state's commitment to encouraging the responsible development of one of the most promising industries our region has seen in decades. The Arkansas Oil and Gas Commission has long played a role not just in regulation, but enabling the development of Arkansas's natural resources, leading to economic growth and jobs in primarily rural communities. Today, we have the opportunity to continue that legacy. While royalties are a key factor, they are only one part of a much larger equation. The economic effect of this industry will touch nearly every community in South Arkansas, from job creation and infrastructure development to increased tax revenue and the growth of local businesses. Across South Arkansas, many individuals, institutions, and organizations are already preparing to welcome and support this emerging industry. As you can see here today, many of them are here speaking in support. This is not just a passive hope, it is a coordinated, intentional effort. Companies pursuing lithium production, including Smackover Lithium, have made a concerted effort to engage with our communities and to become strong community partners. They built relationships, supported local events, invested in community organizations, and have been active contributors to our region's workforce, community, and economic development. This region has so much to gain. We have the resource, we have the community, we have the will. Now we need the policy support to show that Arkansas is ready to lead. Thank you for your time and consideration.
Thank you, ma'am. Commissioners, any questions? Thank you. Next card I have is Remy Loasso.
Well, afternoon now. My name is Remy Loasso. I'm the Lithium Area Manager for Saltworks LLC, an affiliate of ExxonMobil with an office right here in downtown Magnolia. On behalf of Saltworks and ExxonMobil, I'm here today to express our support for Smackover Lithium's proposal. For Arkansas to establish itself domestically and internationally as a leading lithium producer, a clear, competitive, and consistent royalty framework is imperative. We believe the robust framework included in Smackover Lithium's proposal meets this criteria. It provides a royalty structure that is clear and consistent and applicable across a diversity of markets, development scenarios, products, and subsurface resource, while adhering to Arkansas's statutes, regulations, and precedents. It is important to remember what is being requested of the Commission today, determining a fair and equitable compensation to mineral owners for their resource contributions, which in this case is brine with dilute lithium concentrations. We heard today and continue to hear objections and alternative proposals based on total developer business economics, payments on full financial revenues, and substantial access to value associated with downstream specialty products. Such suggestions move far beyond the fair evaluation of a raw mineral to an unequitable basis for compensations that do not account for the contributions of the developer that must not only produce the brine from the ground, but also extract, purify, and refine the lithium ions, ultimately creating specialty products. The developer must use state-of-the-art technology to deliver these products to market while bearing significant capital demands and extensive risk associated with a brand new venture. What has been proposed in objections and alternatives is inconsistent with any existing methodologies in Arkansas for compensation. One does not pay mineral owners today based on the multitude of direct sales of finished products like gasoline, jet fuel, or bromine derivatives. Sliding scale methodologies as proposed are also misaligned with general industry standards. Our own review of mining mineral royalties, specifically with private mineral ownership, show that all but a fraction are fixed top-line structures, where market price already provides mineral owners proportional upside access and downside balancing compensation. Additionally, variable structures such as sliding scales are incompatible with Arkansas's Brine Conservation Act, as identified by Mr. Honey here today, which clearly identifies the brine as the mineral and sets a clear mechanism for the valuation of brine and its additional substances at the point of production. Specifically, the statute sets forth that a brine unit participant is entitled to 8 times the average lease compensation or royalties for the unit at its fair value for his or her brine. If royalties are based on a percentage of end product value, a unit participant is sharing in the value of developers' labors to turn brine into specialty products. Brine production costs often account for only 15 to 25% of the total cost to produce, extract, and refine lithium products. Any fixed or variable lithium royalty structure that is greater than 2.5% would generate disproportionate compensation mechanisms under Arkansas statutes and unequitably move well beyond the value for minerals. It is for this reason fixed royalty structures are the precedents in Arkansas. The alternatives simply aren't compatible, and 2.5 represents the maximum equitable basis. Smackover Lithium's proposal emphasizes the importance of benchmarking as a way to demonstrate Arkansas's competitiveness and equitability in lithium markets. Saltworks' own benchmarking, analysis, leasing, and mineral agreements lead to a consistent conclusion within the range of Smackover Lithium's proposal. To be clear, beyond leases that default to an AOGC set royalty, ExxonMobil and Saltworks holds tens of thousands of acres of leases across Miller, Lafayette, and Columbia County, where the lithium royalty is already agreed directly with mineral owners. The royalty rate in these leases ranges from 1.5 to 1.82 to 2.5%. Even our own exploratory activities in adjacent Smackover states, such as Texas, are in the same equivalent range. Establishing a clear, consistent, and competitive royalty structure is one of the necessary foundations for development consideration. Developing the lithium industry in Arkansas would not only benefit mineral rights owners, who include in and out-of-state individuals and corporations, but also generate long-term economic benefit for everyday Arkansans in the forms of direct and indirect jobs, business and service opportunities, additional tax revenue to fund local communities, and much, much more. Therefore, we strongly support and urge the Commission to adopt Smackover Lithium's proposal here today. Thank you for your time.
Thank you, Mr. Lasso. Any questions from the commission? Thank you, sir. Next card is Vanessa Sasser. Did I pronounce that correctly, ma'am?
No, sir. It's okay.
Why don't you, I kind of figured I didn't, but would you be so kind as to identify yourself, please?
Yes, sir. My name is Venetia Sasser. I'm the Chief Development Officer for Walnut Hill and the co-chair of the Lafayette County Chamber of Commerce.
Thank you, ma'am.
Thank you all for the opportunity to speak today. I am proudly an 8th generation native to Lafayette County. I stand before you not only as a lifelong resident, but as someone who has committed their professional life to seeing this county and the people thrive. I rise today to support Smackover Lithium's royalty application, not just because it aligns with current market realities, but because it reflects a broader opportunity for sustainable, long-term economic growth. While I believe there will be room in the future to evaluate royalty rates as the market matures, what has been proposed today is fair and reasonable. In Lafayette County, we've seen Smackover Lithium meet this community where we are. Over the last year, they have demonstrated consistent investment in education, workforce
workforce development, and local engagement. They've listened, they've shown up, and they've communicated with transparency. To my community, the royalty only represents one of the numbers on the page that translate to real economic benefits for our community. It represents new educational opportunities for both youth and adults, a stronger ecosystem for small businesses, retail and housing opportunities, and better healthcare access for a growing workforce. This is what meaningful economic development looks like. We are a small but proud community built on generations of hard work, sacrifice, and hope. For us, this development of the lithium industry is about preserving what legacy already has been created and create something new. I respectfully urge the Commission to approve this application, and I encourage Lafayette County citizens to see this not as a final decision, but the beginning of a transformation, one that can benefit the entire southwest part of Arkansas. Thank you.
Thank you, ma'am. Questions? Thank you. Elizabeth Anderson.
Good afternoon. Thank you, Commissioners and Judge, for your service to the state of Arkansas. And I also want to give a special thanks to Mr. Parks, CEO of Standard Lithium, for taking the time to meet with royalty owners these past few months. I do want y'all to know that we have met with Standard Lithium, and we would like to share some of the financial risk of going into the royalty industry. And by doing that, we would like to offer a low rate, starting low with a sliding scale of moving and growing as the production of lithium continues. This would be in a sunset or expiration, or as discussed, a sliding scale. As most of you know, I'm a significant royalty owner here within Southwest Arkansas, and so I hope that you will consider whatever you set, that you would set it so that it can be revisited in the near future. So as this economic boom starts, that we can look back at it at another time. And I hope that Standard Lithium executives will consider Southwest Arkansas their home soon. Thank you.
Thank you, ma'am. Questions? Thank you. M. Justin Ackley. Last call for Mr. Ackley. Joshua Gaines. Come on up here, sir.
Good afternoon. My name is Joshua Gaines. My family and I own about 45 acres with mineral rights. I'm here representing the small guy, the regular guy, the ones who will be affected by the decisions that y'all make here, being influenced by corporate greed. That's all this is. You can talk about how much community development and education and all this kind of stuff. Great. If that's what they choose to do with their money, great. But if they're not paying the landowners a reasonable royalty for their minerals, then it's our money that's actually financing that. I've read article after article about how many billions and billions of dollars they're going to make. Oh, it's going to be so great. They can't do that without our minerals. They want it for free. They want to just take it and give us a little participation trophy. Thanks. We just ruined an acre or two of your land with our well and all the traffic, but we didn't compensate you for it. There's a lot of big corporate interest in here. I've heard them speak, and they use a lot of flowery words and a lot of flowery languages. But what it boils down to is the decisions y'all will make on this whole lithium royalty thing will affect little people like me who wear overalls to work every day. I would really urge you to look and not try to reinvent the wheel. All royalties have been set for decades. You use that as a basis instead of trying to reinvent the wheel because of corporate greed and the way they want things done, and the way other people who don't have a dog in the fight, except for what they're going to benefit from it. It's our land that will be developed for their use, and then we lose the use of it. It's not right, it's not fair. So 2.5% is laughable. I would laugh you off my property with that offer. That's all I got to say. Thank you.
Thank you, sir. Questions? Thank you, sir. Next card is Stephanie Tully. I'm going to mess this up too. I'm sorry, ma'am. Mostly because I can't read it. Would you be so kind as to identify yourself?
Absolutely. I'm Stephanie Tully D'Artes, and sorry, I'm a doctor. We all write that way.
See?
I'm the president of South Arkansas College, and I appreciate all of you for allowing me to speak this afternoon. I come here to let you know that at the educational institutions that are serving South Arkansas are committed to the development of the workforce in support of the growing chemical industry. I also wanted to share with you, I was also asked to share with you the story of one of our program graduates, our Catalyst program graduates, Angela Meadows, who was not able to speak today but wanted me to share with you about her career in economic mobility as well as her entering the chemical industry. So if you will allow me, I'd like to read from her statement. I have redacted a little bit just for the sake of the Commission's time, but it's an excellent story. My name is Angela Meadows. I'm a 50-year-old wife, mother of 3, and a grandmother of 2 grandsons. I'm a recent student and graduate of the Catalyst program offered at South Ark. I will start by saying that the Catalyst program was a game changer for me. During the 16 weeks I attended the program, I was given the tools from writing resumes to learning safety inside industry facilities to actually learning to read PIDs and working on hot skid. Also, I learned the difference between a job and a career. I never would have thought I would be changing from a job to a career this late in life, but I did. I successfully completed the program, and within a week's time, after completing the program, I had an interview with Standard Lithium. To this day, I often wonder what Will Smith and Ben Browning saw in me that day to give me an opportunity to work there. Almost 2 years later, and I advanced from a chemical process operator to a lab technician. I had no experience, but with hard work, determination, many talks with God, and so many coworkers encouraging me, I have been successful in my new career. My life has changed in so many ways from the beginning of the Catalyst program until now. I encourage all men and women, young and old, it's never too late to change from a job to a career. I would like to thank all the sponsors of the Catalyst program and the Standard Lithium team for investing in me. And if I had to do it all over again, I wouldn't change a thing. Ms. Meadows had previously been employed as a school janitor and is now actively employed in the chemical industry with Standard Lithium. While this is just one fantastic story, there are many others in progress, and I would like the Commission to note that there are potentially hundreds more, and we, as the educational institutions, support that. Thank you.
Thank you, ma'am. Questions, Commission? Yes, Mr. Chairman.
Madam, we want to thank you for your campus and letting us have this meeting here today.
Rock School.
Wow.
South Arkansas College in El Dorado.
Oh,
We've been in our conference center.
You make a mistake every once in a while.
We're all partners.
Anyone else from the Commission? If not, thank you, ma'am. Last card I have is James Ketchum. Mr. Ketchum? Well, apparently that is it. Anybody that hasn't filled out a card or has filled out a card that I do not have. I will note for the record that that was the totality of both the written and the oral comments. Turn it back to you, Council. Do you want to do a short closing statement, Mr. Honey?
Yes, that's very brief.
Sure thing.
If
Please proceed.
Thank you very much for your time and your patience. I know this is our third time to visit this issue, and we very much appreciate you all focusing on this and giving it the consideration it deserves. Just a couple of quick points. You know, the Arkansas statute, the Bryan Act, has provisions for integration. And those provisions require that an integrated party be given an option of taking, if they elect to participate, taking their brine in kind or receiving the value of it. And the statute says value is 8 times the compensation that you would get under a royalty. And that's just in the statute. In this case, we're proposing, you know, a 2.5% royalty. If you multiply that by 8, that's the value of the brine would be 20% of the value of the finished product. And I mention that just to illustrate that those ratios sound about right. Whereas, for example, a 14% or a 12.5%, you know, that would be equivalent to the person who owns the iron ore getting 100% of the value of a finished car as the price they receive for their iron ore. It just doesn't make any sense. The proportions are wrong. And for that reason, I use that as a metric to suggest that this proposed royalty is in fact a fair and equitable and appropriate royalty under all circumstances. I also note that, you know, you don't want to kill the goose that laid the golden egg. My client and others like it they do have options. My client is busily leasing in Texas, and they've got over 1,000 leases now that are on better terms than what we're proposing here today, with a resource that's a higher quality resource. You know, Arkansas is positioned, if it'll move forward, to take advantage of the fact that it's ahead of the game. But that head start is going to evaporate if we don't move forward. With that, I ask that you approve the application as applied for.
Thank you, Mr. Honey. Mr. Rankin.
Thank you, Judge Moulton. Again, on behalf of the South Arkansas Minerals Association, we do appreciate your time and your consideration. We know you guys have a tough job to do and a tough decision to make. But if you'll give me just a moment, I'd like to just kind of, what I feel, walk back through what we've kind of shown you today and couch that in terms of what the applicant's application and proof puts forward, and maybe more importantly, what it does not. The statute that governs additional substances to be derived from brine puts it upon this commission to make it 2 determinations. One is whether it can be profitably extracted. This is the 3rd time we've been here for you to make that determination, and the first 2 times we were here, they didn't provide you enough information to make that determination. And our position is today they haven't done it either. For the first time at hearing, and certainly before any of us had a chance to review it, you saw some new financial information today. Original information that was published in January of 2025 said they were going to produce 45,000 tons of lithium. And today you heard that was 22.5. And I think they tried to describe it as that's our phase 1. But that information, to my knowledge, hasn't been made public yet, at least not available to scrutiny. But to counter that, they said, well, we've adjusted our costs accordingly. But they didn't tell you how they did that. They didn't tell you the details of how their costs have adjusted on that. They basically gave you a 1-page summary of that information and said, trust us. That hasn't carried the bar, hasn't chinned the bar so far in our previous applications, and we don't believe it chins the bar today. Your second determination is a fair and equitable royalty on substances that can be extracted from lithium. That statutory language begins with the phrase, in addition to any other amounts due and owing by the producer of any unit. It's my position, the position of the South Arkansas Minerals Association is it doesn't matter what the brine royalty or the land payment or what that is. This statute requires you to set a royalty on the additional substances extracted. And you have to decide what that fair rate is. We believe that an adjustable rate that is based on the actual sale of lithium is the most fair and equitable way to balance the input and the money that's going to be put into the project by these producers with the rights of the royalty owners. That same adjustable rate was proposed by Standard Lithium just 1.5 years ago. When I asked Standard Lithium about why they changed their position, their only explanation is we got a different business partner. If it was good then, it's good now. We think you should at least consider that same methodology. I think we showed you how indexes are unreliable and how they're subject to manipulation. I think they actually agreed with us that that is possible. They just believe it won't happen in this instance. It happened in the financial industries with LIBOR. I mentioned that. And if a heavily regulated industry like banking can fall victim to it, certainly this can too. We think that the adjustable royalty rate calculated on actual sales is the most fair and equitable royalty to be set by this commission on the lithium. I would like to say about 2 more points that Mr. Honey just made. Standard Lithium is basically sitting before you and saying, give us what we want or we're going to take our toys and go to Texas. I would ask you to consider that's probably not likely for 2 reasons. One, they've got a $225 million investment by the government with taxpayer money that has to be used here in this unit. That's a sizable contribution that can't go anywhere else but here. And despite what Mr. Honey says, I would say that our brine volumes and our brine concentrations are equal to or superior than Texas. And then finally, on the 1/8 royalty issue, I would pose to this commission that it's not for economic experts to determine what that means. Lawyers disagree and they argue about what law means all the time. That 1/8 royalty is for participating parties. It's actually in this section in 8 that's got the section heading participation by owners. That is the royalty on the brine. Your job today is to determine the additional royalty separately set on substances that can be extracted for brine. It has its own subsection in a different section of the code. We feel that your duty today and your job today is to determine what that fair and equitable royalty is on the additional substances of lithium, and we believe that the price of lithium received by the producer is the best way to do that.
Thank you, Mr. Rankin. Mr. Honey, any rebuttal?
No.
All right. I am going to note for the record, we did have one recusal. It was Commissioner Weiser. And Special Commissioner Fritchie has agreed once again to take up the mantle. He is at the tail end of the table, and I know that the staff as well as the rest of the commission appreciates his willingness to serve on this matter once again.
You're welcome.
I am going to call the evidentiary part of the record to a close. Now, typically, I would just ask for a motion from the commission, but I suspect that they may want to have discussion before we have a motion. I don't know. What's the pleasure of the commission? Would you like to have a discussion, Mr. Chairman? Would you like to have a motion and then discussion? Is there some idea from the commission how they want to proceed evidentiary from a procedural standpoint? I'm sorry.
I'd like to make a motion and then do it to see if there's any discussion on it.
All right. Let's go ahead and make your motion, Commissioner Wolford, please.
Okay. The motion is to approve the application as applied for, with finding that they have demonstrated that there is an additional economic substance to be extracted to take the 2.5% royalty as the royalty rate as presented. For me personally, this proposal is fair, is consistent, and it is competitive. I've been through the process I've always tried to tie back to the prior extraction case that we commission approved in 173/2007-04, and this royalty rate, in my opinion, is consistent with the methodology that was used in that process. The royalty rate has been improved from the 1.82% that was determined in there to a higher rate, and is now tied to a index marketable product rather than being similar to the in lieu of type royalty.
All right, thank you, Commissioner Wolford. Is there a second to that motion?
Second.
Commissioner Phillips has seconded. Does the commission need to discuss any further?
Sorry. Would the, and if I'm out of the box, tell me. Now, in the past, we've left some records open in case, like in 18 months, we need to make some adjustments.
The way I look at this is a unit, and so we have continuing jurisdiction, would be my opinion.
I agree with that.
Yeah.
But there's no need to do that then, you
No.
think?
We can reopen a case, I think, at any point, especially as it relates to a unit.
Okay. Okay.
Any other discussion from the commission? If not, show of hands. All in favor? Motion passes unanimously, 9 votes to none. All right, that concludes, folks, that docket number 032-2025-05. Commissioners, do you want to take a 10-minute break before we get to the staff docket?
Yes.
All right, or 15?
Just go ahead.
15 minutes. We are off the record until 2:25. Folks, if you could,
Well, next month,
we still have a couple of items on the agenda that we need to address.
Yeah, just be the same president. Probably, is it going to be on the same? Sure, but they're going to build a record.
Won't they say?
These guys just
Give them time. I'm gonna.
it's going to be 2 years. Yeah.
Yeah, I figure somebody's going to sue us.
Yeah, you got a couple of years. It's going to be probably.
That's hypothetical. There hasn't been any kind of.
I'm trying.
Oh, I know.
But your chairman is,
I know.
he's wondering.
Right there.
Mine will be quick.
We going to be in the paper, you
Oh,
think? Which one? Not ours, of course.
yeah. Yeah, ours will.
We'll be in the Banana News. The Banner News.
Our paper will pick up the end of the world about 10 days later.
Yeah. They are kind of slow.
Yeah.
Large flash, see?
10 days ago.
Okay. You want me, you need that noted for the record?
I just think when you have a book count, this is what I'm gonna work on.
I'll just note
Okay.
that. Just for that.
Man, if we fly so these days, all of these days. That's Saturday, and that's Saturday through Saturday. So you're talking about the 13th through the 20th? No. Yeah, it will.
You're going to leave that like
This table's not solid.
That's gonna leave a mark.
Okay, that'll work. Thank you.
You're going to need that later. Oh, yeah.
All right, we are back on the record. Two items left on the agenda, both under staff docket. I will also note for the record that Special Commissioner Fritchie was only serving for docket number 032, 2025-05. So he is no longer present. We are down to 8 commissioners at this stage. First item on the staff docket, docket number 033A, 2025-05. Operator is Alpha Oilfield Water Services, LLC. Mr. Pilkington is the attorney of record. Subject is request for order to compel compliance and the assessment of the civil penalty. Location is Section 7, Township 7 North, Range 18 West. County's Pope, field is Oak Grove. Mr. Pilkington, you are recognized, sir.
Thank you, Judge Moulton. This is an application that was filed after an inspection of a site with a possible release. There is an ongoing remediation, and because of the work that's going on right now, Commission staff is requesting to continue this matter until the June hearing.
Any objection for the commission? If not, your motion is granted for the continuance. We will take it up the next meeting.
Whenever that is. Thank you.
All right, next item is docket number 034A, 2025-05. Operator is the Texas Company. Ms. Rainey is the attorney of record. The subject is the emergency request for expenditure of funds from an abandoned and orphan well, from the abandoned and orphan well plugging fund. Location is Section 34, Township 15 South, Range 15 West. County's Ouachita. The field is Smackover. Ms. Rainey, you are recognized for the very first time.
Thank you, Judge Moulton. I want to start by saying that I have had the privilege of working for this commission for the last 4 years. I started off as a part-time administrative assistant and now sit before you as a member of the Arkansas Bar.
Today, I'm excited to be able to present my first staff application to you as an attorney. There are 5 pre-filed exhibits. Exhibit A is the Texas Company contact information, which we retrieved from the AOGC website. Exhibit B is the commission log of well form for the E.G. Johnson number 4 well. Exhibit C are photos of the E.G. Johnson number 4 well. Exhibit D is the notice of hearing. Exhibit E is the affidavit of notice. Commission staff would like to move for the introductions of exhibits A through E.
Motion is granted. Those exhibits are made part of the record.
Yeah.
Ms. Rainey, before you gravitate any further, any recusals on this matter, commissioners? For the record, there were none. Please proceed.
Thank you. At this time, I would like to take testimony from Mr. Looney.
You swear or affirm the testimony you're about to give in this hearing is going to be the truth, the whole truth, and nothing but the truth?
I do.
Thank you, sir.
Thank you, Judge Milton. Mr. Looney, are you currently employed with the Arkansas Oil and Gas Commission?
I am currently employed, yes.
All right. What is your title?
I used to say that too, Gary.
I'm the Assistant Director in the El Dorado Regional Office and temporary drilling engineer now or something.
Mr. Looney, are you aware that an emergency application was filed by Commission staff regarding requesting expenditure of funds from the Abandoned and Orphaned Well Plugging Fund?
Yes, I am.
Would you tell the Commission why the emergency application was filed?
Yes, Commission staff was notified Monday, May 12th of a potential release of produced salt water from a well believed to be the Texas Oil Company that we later have pretty much confirmed to be the E.G. Johnson number 4. This well was drilled in 1925, and water, it's just an emergency situation that's still emerging a little bit, but we've been containing, capturing, and hauling off the salt water. Now we're re-entering the well to plug it.
Okay. I have nothing further.
Commissioners, any questions for Mr. Looney?
I do. How much, how much funds do you think we'll need?
Pardon me?
What is the total, do you have any projection on cost? Yeah.
Projection is rough to say. It's we're drilling in some pretty hard environment, and we're doing it with a workover rig. Basically, we thought we would find casing, and we've not been fortunate to find that casing. You know, we're at $300,000 and growing pretty rapidly right now.
Okay. Well, I was trying to figure out how to make a motion to support you, so I didn't know how to characterize that. So, what do you propose that so we can help y'all remediate this situation?
Well, currently we're trying to re-enter the well. We feel like we're in the well bore. We've been talking with a drilling company that's helped us and the mudman that's helped us. And our current contractor is pretty confident we're still in the well bore, and I believe we are too. We're trying to get to the Natchitoches Formation, trying to get through the Natchitoches. We think that there's supposed to be a liner there. If we can get to the base of it, then I'm going to propose that we start plugging it so we can separate what we believe to be Graves water, Graves Formation water coming up from the Natchitoches, which is a producing formation there. We've already got deep enough to take care of our freshwater resources and plug back and protect them. We'll probably try to identify where that water is exactly entering that well bore. We're not quite sure at this moment.
Okay.
But our goal is to make about another 220 feet or so, and start cementing operations.
Basically, just plug the main in the well.
Yes, sir.
Okay. Thank you.
Correct. Any other questions from the commission? All right. That concludes your presentation, Ms. Rainey?
Yes, Judge.
Thank you so much. I'll call the evidentiary part of the record to a close. Matter is ready for adjudication. Is there a motion from the commission?
Motion we approve is applied.
Second. Motion made, seconded. All in favor, show of hands. Motion passes 8 votes to nothing. Thank you very much.
Okay. Congratulations, Julia.
And this meeting is adjourned.
Hold on a second.
Oh.
We're going to have
Judge.
2 other matters, Mr. Chairman. This is the open docket part of the agenda. Commission will hear public comments concerning the following areas of commission jurisdiction. The load out waste of oil and or gas is taking place and is reasonably imminent. The optimum and equitable rate of production for each controlled source of supply. Whether or not any rules and regulations currently in effect should be considered for revision, or if additional rules should be considered, or any other matters brought before the commission over which it has jurisdiction. I know that the general public presence is pretty sparse at this point. And I will also note for the record that there was no response to that call. Director, do you have a report that you would like to provide for the commission, or are we ready to adjourn?
We're ready to adjourn.
Mr. Chairman?
This meeting's adjourned.
There you go.
Be safe.
All right.
Yeah.